geprägt
Dann
von
würde ich das erstmal
80er Jahren, ja.
hier hinstellen und wenn ihr dann dahin geht, dann nehme ich das einmal schnell da unten hin.
Ja.
Dann haben wir da Scanner, bringt gleich noch Batterien mit. Ich brauche tatsächlich 1,5 Stunden, um alle Karten leer zu machen, damit ich wieder weitermachen kann. Das ist echt hart.
Ja.
Aber es klappt.
Ja, wunderbar.
Und das Bild ist sehr, sehr gut. Also ich hoffe,
Ja.
Ton ist gut, aber Bild macht echt Spaß. Also
Ja.
da kann man was Gutes draus machen.
Sehr schön.
Dann lädt jetzt die Videos auch irgendwo hoch oder streamst du die nur irgendwie?
Nein, die wird Michael auch hochladen. Wir müssen nochmal darüber sprechen, wie genau und wann. Aber ja, das soll rein. Und wie gesagt, also wenn Sie das raushaben wollen, können Sie mir einfach eine E-Mail schreiben. Aber das wird wahrscheinlich über unseren Account sozusagen laufen. Dann steht da Pufendorf-Gesellschaft, dann steht da dieses Video. Sie können auch gleich nochmal am Anfang sagen, dass Sie nicht die Meinung der Bundesbank vertreten, dass wir das mal ganz klar machen. Und wie gesagt, wenn Sie es raushaben wollen, schreiben Sie mir einfach eine E-Mail, dann kann ich das einfach auf privat schalten und dann ist es wieder raus. Aber ich gebe ja schon viele Videos über Geldcheck zum Beispiel.
Ja.
Ich habe auch ein paar gemacht von der Freien Universität, aber es gibt ein paar hundert Klicks und dann das fängt schnell ab und man verschwindet im Vergessen.
Man sucht, dann taucht auf der Seite nicht mehr auf. Was meinst du?
Nein, keine Ahnung. Also ich meine, normalerweise der Traffic in Anführungsstrichen, das ist in den ersten 1-2 Wochen nach Veröffentlichung, danach geht das auf Null zurück.
Ja.
Also das liegt da dann und kaum noch jemand schaut sich das dann an. Aber
Ja, stimmt, die Videos von der FU, die du da gehalten hast, das haben nicht viele Klicks.
nee. Ich habe mal bei Flensburg bei der Universität was gehalten, auch nochmal zu der Frage, und beim Euro halt, wie kann man weitermachen, wie kann man die Nachfrage hochhalten in Zeiten von Krisen. Da waren das immerhin ein paar tausend, also das war schon deutlich mehr.
Meinst du dieses Interview, das du da heute in Flensburg gegeben hast?
Genau.
Wie hieß sie nochmal? Ich hab's vergessen, die Frau, die ich da interviewt habe.
Genau, die war ganz gut. Also die hat halt auch getraut sozusagen einfach naiv zu fragen, weil er keine Ökonomin war. Und das ist immer das Beste, wenn die Leute halt wirklich ehrlich fragen. Ich hatte jetzt letztens
Da musst du das halt auch ein bisschen anders erklären, ne, für die breite Öffentlichkeit.
Genau, man muss diese einfachen Fragen stellen halt.
Genau.
Also wie das Geld geschöpft wird und dass man auch dann sagt, das ist ein Computer, der das ist. Und sonst, wenn man halt sagt, die Verbindlichkeit mit der Zentralbankbilanz, dann hast du ja 99% der Leute schon abgehängt. Das kann sich keiner mit vorstellen. Also
manchmal hat sie dann immer noch nachgefragt und dann musstest du das nochmal.
Genau, das fand ich sehr, sehr gut von ihr, dass sie sozusagen auch getraut hat, ich meine, das ist ja auch für die Journalisten, ich meine, sie ist ja Pressesprecherin, das muss man natürlich auch dann gucken, die wollen natürlich auch nicht dumm dastehen, in Anführungsstrichen, deswegen so dumme Fragen zu stellen, in Anführungsstrichen, die sind ja nicht dumm, die sind total intelligent, aber man muss sich halt trauen und den Mut haben, die einfachen Fragen zu stellen. Und das ist halt, wenn die Journalisten das teilweise auch ich habe letztens auch einen vom NDR, hat jetzt dann so Fragen gestellt, so, was halten die denn von der 90% Staatsverschuldungsdefizitgrenze und sowas halt. Das sind dann so Fake-Fachwissen, also es ist quasi Pretense of Knowledge, so ein bisschen nach Hayek'schen Sinne. Wenn die Leute sozusagen nicht ehrlich fragen, sondern quasi so Soundbites aufgreifen, was man halt so sagt. Und dann wird das Interview so ein bisschen krumm, weil ich dann eigentlich sagen müsste, bei der Frage sieht man schon, dass sie auf gut Deutsch gesagt eigentlich keine Ahnung haben, aber das kann ich aber nicht sagen. Und dann wird es sofort so ein bisschen, dann kommt man in dieses Diplomatische rein. Aber deswegen, ich mag das am liebsten, wenn jemand sagt, können Sie mir das von Grund auf erklären. Ich stelle mich jetzt mal hoch. Woher kommt das? Und dann kommt
auch bei den Kommentaren, dass bei der Flensburg auch eine positive Resonanz hat.
Ja, und so versuchen wir das dann auch bei den Konferenzen. Wir machen auch nochmal Workshops, dann auch nochmal, dass wir den Leuten halt sagen, bitte fragen die wirklich das, was sie wissen wollen und fragen die, wo kommt das Geld her? Weil es ist letztendlich, es sind Keystrokes in Anführungsstrichen und darüber muss man sich unterhalten. Und wir sind nicht wie Attack oder so, dass wir sagen, wir haben ein politisches Ziel oder so. Was mit der Staatsfinanzierung ist überhaupt nicht unser Ding sozusagen. Wir sagen halt nur, es gibt die und die Vorschläge, auch Green New Deal, Job Guarantee, was ist das eigentlich? Geht das auf in Anführungsstrichen und was sind sozusagen geldtheoretisch die Hintergründe? Aber wir machen auch wahrscheinlich nächstes Mal, wenn wir die Konferenz machen wir was zum Euro, Treasury dann, vielleicht auch nochmal was zu Bankenregulierung, also wir sind da variabel. Weil aber so ein bisschen auch angewandt bleiben, damit die Leute halt denken, okay, das sind spannende Themen, über die möchte ich dann was hören.
Okay.
So. Ich komme 5 Minuten raus und gleich wieder.
Ja, alles klar. Ja, ich habe einen Kollege von mir, der war zusammen Hiwi in Oldenburg, in Göttingen, der Christian Hecker, der bei der Bundesbank ist in Hamburg. Wir waren mit Hiwi-Kollegen.
Ach, das ist ja interessant.
Genau, und den sehe ich auch immer noch wieder und der schickt mir mal die Reiseberichte. Privaten, reist immer mal mit seiner Frau dann durch die Welt. Ganz spannende Länder.
Ja, ja, der hat ja auch so ein Faible, sage ich mal, so für diese so philosophisch angehauchten Fragen. Ne?
Genau, diese
Gerechtigkeitsfrage und
Ja.
so weiter, ja,
Mhm.
Ethik, Moral, genau.
Ja, und das ist halt, also ich habe immer sehr gute Unterhaltung mit ihm, weil wir sind auch einer Meinung, wir sagen halt auch, wir brauchen eine Ordnungspolitik. Ja. Das haben wir auch vorhin ja auch gesehen. Die Frage, wie das Zentralbankgeld in die Welt kommt, da muss man irgendwie sich zu stellen. Man kann nicht einfach sagen, wenn die Zentralbank Lust hat, dann gibt sie halt welches raus. Nein. Also das muss viel mehr betont werden, glaube ich, dass man halt sagt, es ist nicht so eine Debatte, dass die einen sagen, ja, wir können machen, was wir wollen. Und die anderen sagen, nein, es muss eine Regel geben. Das ist nicht die Hauptdebatte. Die Frage ist ja sozusagen, welche Regeln sind denn effektiv im Hinblick auf welche Ziele? Und das ist eigentlich die Diskussion, die wir haben wollen. Und dann, wie gesagt, wollen wir nur, dass die Leute halt debatteren. Und, ja. Und das macht eigentlich ganz viel Spaß auch.
Ja, das ist schön. Ja. Ja, also insofern habe ich ja jetzt wirklich ein paar, ich hatte mich auch ehrlich gesagt natürlich jetzt ein bisschen mich mal informiert, was überhaupt die Modern Monetary Theory ist, weil ich kannte das vorher auch, aber ich muss ich zugeben.
Ja, es ist alles neu.
Und ja, es ist intellektuell sozusagen durchaus ja auch erstmal herausfordernd, weil man ist ja auch so vom Denken her, nicht? Wenn man jetzt den Staatssektor und die Zentralbank zusammenpackt, das sind wir ja gar nicht mehr gewohnt zu tun. Nicht? Also ich meine, das ist für uns natürlich eigentlich ein No-Go. Aber es ist jedenfalls mal interessant, was das eben auch zum Beispiel die Bilanzeffekte sind und so weiter. Nicht? Dass dann natürlich alles ein bisschen anders aussieht.
Wobei es teilweise identisch ist. Also ich habe in meinem Buch habe ich Kanada diskutiert. Die haben ja eine Direktfinanzierung über die Zentralbank. Also die Bank of Canada ist gezwungen, bei Staatsanleihen unter 6 Monaten Laufzeit, irgendwie bis zu 10% der zu erwartenden Emissionen, müssen sie das quasi sofort annehmen und dann das Konto der Regierung kreditieren. Also das ist quasi eine zwangsdirekte Staatsfinanzierung. Und das endet aber bilanziell in den gleichen Situationen wie bei uns in der Eurozone auch.
Wir hatten sowas ja bei der Bundesbank auch mal früher, so ganz in sehr beschränktem Umfang. Gab es ja auch mal die Möglichkeit, so Wertpapiere da einzukaufen. Da hatte die Bundesbank auch so ein bisschen was sozusagen auf der Bilanz. Ist jetzt aber dann im Zuge des Übergangs zum Euro ist das alles gestrichen worden. Deswegen die EZB ist aber viel weniger als die Bundesbank. Verfassung sozusagen.
Ja, und die ist da, glaube ich, auch in den Gesetzen noch ein bisschen was, hängt da noch was hinterher. Ich glaube, in den deutschen Gesetzen steht auch im Haushalt steht auch immer wieder drin, dass die Bundesregierung überziehen darf bei der Bundesbank. Ich glaube, das steht da noch.
Ja, aber weiß ich nicht, aber erlaubt ist es nicht. Also
genau,
der Überziehungskredit, der ist genau abgeschafft worden, den es damals nicht gab.
Genau.
So, ja.
Aber der steht lustigerweise immer noch drin. Ja, ich habe in meinem Buch versucht, das heißt Geld und Kredit, eine europäische Perspektive. Ich habe versucht, in den Bilanzen darzustellen, wie die Zentralbank Geld schöpft, die EZB, also dann auch die Bundesbank natürlich. Dann das deutsche Finanzministerium, also wie kommt der Staat an Geld und dann nochmal in den Banken halt.
Ja,
und dann habe ich mich wirklich auch eingelesen in diese juristische Materie, so ein bisschen, was sind denn so die Regeln.
Kirk, we thought this was the job guarantee room, but it's the money creation room.
Yeah, the job guarantee is tomorrow. Sorry, you're talking about the presentations.
No, the one that's on the schedule for today.
Yeah, session 2.
Yeah, that's later. We are now in the panel. This will be your session is after this one. There will be a coffee break, and then we will have the presentations. Never mind. Ja, wir mussten das ganze Programm nochmal umstoßen, weil wir so viel Zulauf hatten. Also wir haben gerechnet so mit höchstens 20 Präsentationen und nachher waren es 50. Auch also halt University und so, also die meisten davon sind akademisch. Und dann haben wir halt gedacht, okay, dann nehmen wir die doch mit auf und dann mussten wir noch ein bisschen umschmeißen.
Ja, es geht morgen noch weiter, nicht? So wie ich gesehen habe,
genau.
Vom Programm her, nicht? Das ganze Mittag im Prinzip.
Ja. Also wir haben
noch einiges zusammen.
Im Nachhinein haben wir gedacht, wir hätten 3 Tage machen müssen, aber es ist unsere erste Konferenz und wir haben mit dem Interesse nicht gerechnet. Also deswegen hat uns das jetzt einfach auch ein bisschen überrannt. Aber
Das ist was Gutes.
ja.
Besser als umgekehrt, keine Sorge. Keine Sau taucht auf.
Ja, mal gucken. Vielleicht kann man das verstetigen, dass wir dann vielleicht alle 2 Jahre eine Konferenz machen oder Konferenz-Workshop, irgendwie sowas in die Richtung halten. Ich wollte eigentlich auch noch so einen Workshop zum Geld, zum Euro halten. Morgen früh sollte das sein, aber wir hatten dann so viele Präsentationen, das musste nicht streichen. Das ging nicht mehr.
Okay.
Wie viele Sessions haben wir denn?
3. Also wir haben 11 Sessions insgesamt mit bestimmt 4, 5 Leute im Schnitt irgendwo. Also, ja. Und jetzt sind die Leute halt beim Mittagessen und ich hoffe, dass wir wieder anfangen können.
Fasziniert in jeder Hinsicht. Manche stößt es auch ab, aber deswegen ist es eben auch faszinierend, weil es was ganz Schlimmes und Böses ist. Und,
Genau.
Das Kino ist gleich um die Ecke, das Rathaus Schöneberg?
Ja, Rathaus Schöneberg. Und ich lade gerade den Film privat runter.
Achso, da wird das ist das Odeon, nicht? Hier, das Kino hier?
Nee. Also wir haben im Rathaus Schöneberg gibt es einen Kinosaal.
Achso,
Weiß auch niemand. Aber man kommt daran, wenn man die Bezirksoberbürgermeisterin fragt. Dann kann man da einen Film zeigen halt. Und die haben aber kein Internet, das heißt, also ich versuche jetzt gerade, ich lade jetzt privat einen Full HD Film runter, packe den auf einen USB-Stick und laufe dann nachher dann zum Rathaus. Und dann tun wir das auf den Rechner. Und das wird schon hinhauen, denke ich mal. Aber es ist schon ein bisschen komisch. Also leider waren auch im Rathaus Schöneberg beide Mitarbeiter aus der Medienabteilung waren krank. Und ich habe da halt aus Spanien angerufen. Ich war bis Dienstagabend in Spanien. Immer erreicht, zumindest nichts. Mittwoch war dann keiner von denen da und dann haben die mir gesagt, ja, dann müssen die Freitag um 11 mit unserem Drittfilm sozusagen, der extra kommt. Naja, so ist das bei Konferenzen. Aber das ist jetzt schon echt knapp. Ich weiß gar nicht, wie viele Tickets wir verkauft haben.
Das ist ja auch so.
Was ist das, so einer dieser Wall Street-Filme oder sowas?
Ja, das
Krise?
Genau, ein Krisenfilm, der heißt PIGS, also PIIGS. Und das war ein italienisches Filmteam, die sind halt in so eine Institution gegangen, eine staatliche, was war das denn nochmal? Ich hab's wieder vergessen. Irgendwas aus dem Sozialbereich. Die haben dann gezeigt, wie die Ausgabenkürzungen des Staates konkret im Sozialbereich Leute vor Probleme stellen. Und dann haben die halt immer wieder auch interviewt, Ökonomen halt, was sie halt meinen zu der Kürzungspolitik und ob das wirklich notwendig ist und woher der Staat sein Geld bekommt und so weiter. Also das ist schon so ein bisschen auch ein politischer Film letztendlich. Ja, aber er soll eigentlich aufklären, also die versuchen halt zu erklären, was da in der Eurozone in Italien passiert ist. Und ich meine, jetzt haben wir, ich glaube seit gestern ist, glaube ich, klar, Italien ist wieder in der Rezession auch.
Ja, also übliche Definition, die ja jetzt nicht so super sinnvoll ist, aber auch richtige.
Aber das ist halt, also dann ist ja weiter sozusagen die Frage, ob man es nochmal so macht wie letztes Mal, weil ich glaube ehrlich gesagt, dass der Euro dann erledigt ist und die Gewinne dann aufwerten. Also die italienischen Banken werden ja nicht dafür sein, den Euro zu bleiben, die sterben alle. Und die italienische Regierung wird auch nicht sagen, wir machen jetzt Massenarbeitslosigkeit und lassen uns abwählen in 3 Jahren. Das wird nicht passieren. Und dann ist die einzige Lösung Euro-Exit. Und das wäre natürlich fatal, weil das auch ein EU-Exit wäre. Und dann ist die von England raus oder UK raus, Italien raus.
Aber das wird es nicht geben. Aber ich denke, das ist optimistisch. Also, das Ganze wird auch alles nicht. Also stark politische Projekte.
Es gibt auch viel Verhandlungsmasse. Da muss man das mal auf den Tisch bringen.
Ja, das ist gut verhindern. Am letzten Abend wird das dann abgeschlossen, das wird mit dem Brexit ähnlich verlaufen, denke ich mal.
Ja, das ist
Bitte?
ja. Nee, wir warten. Also wir können schon auch bis 14 abwarten. Wir können auch gerne mal durch die anderen Räume gucken. Kann sein, dass sich irgendwelche Leute auch verlaufen haben in die anderen Räume. Weil die dachten, das ist irgendwie das zu groß. Andererseits sind auch die Restaurants aber hier in Berlin sehr, sehr, sehr gut. Das kann man sagen, da kann man irgendwie noch ein bisschen. Wie gesagt, das Wohnen ja um die Ecke. Die sind hier gut und günstig. Ja, genau. Heute waren wir Movie House, das ist auch sehr ungünstig. Der Mittagstisch für 6,90 €. Suppe ist ein auch
Ja?
Ist das so günstig? Wieder auf dem Fleck?
Ja, wir haben halt für den ganzen Platz, es gibt hier 5, 6 Vietnamesen. Es gibt hier mindestens 3 Inder. Es gibt mindestens 7 italienische Restaurants. Also kein Witz, das wird
Immer noch ein Dönerbude und was.
Ja, das ist aber sehr zu noch.
Ja, die müssen 7 Days ins Leben. 7 Days ins Leben. Das war.
Ich glaube, das Fenster ist nicht mehr zu machen.
Vorhin war das fast auch so.
Ja, das fand ich gut. Ich habe deswegen auch der Pause noch quasi improvisiert, weil ich habe die Leute auch mit der Pause einfach Oh yeah, the workshop, the strategy workshop. You have to ask them. Da gibt es noch parallel so einen kleinen Strategie-Workshop mit 8 Beteiligten. Aber das sollte sich hier nicht groß auswirken. Es gibt halt inzwischen auch in vielen Ländern, also diese Modern Management Theory, weil das halt so einfach ist mit den Bilanzen zu erklären, gibt es sehr viele Leute, die das verstanden haben und halt sagen, das will ich auch einmal Leuten erklären. Und so wie wir das halt auch der Öffentlichkeit erklären wollen, ist das jetzt auch in Spanien, in Großbritannien, in Italien, gerade sogar auch mehrere davon. Und wir versuchen jetzt ein bisschen zu koordinieren, dass die Texte werden übersetzt, dass wir das Ganze so neu erfinden. Dass wir dann versuchen, die Öffentlichkeit aufzuklären, vielleicht nicht, dass da nicht irgendwelche krassen Aussagen kommen, die, also niemand hat es jemals gesagt, aber einmal gibt es Leute, die schreiben, MMT sagt, dass Schulden die Krise sind. That doesn't matter. Nie unsere Meinung. Und da müssen wir dann auch gucken, dass wenn sowas irgendwie mal von Vorträgen rausgehauen wird, oder wenn der Economist Quatsch schreibt und sagt, nach MMT müssen die Staatsausgaben immer steigen, was auch Quatsch ist. Also da müssen wir irgendwie gucken, dass wir gegen solche Sachen natürlich dann versuchen, dass die Diskussion zu gehen. Nein, das haben wir nicht gesagt. Das wollen wir auch nicht. Es geht darum, sozusagen, dass wir alle erstmal klar benennen. Danach halt eine wirtschaftspolitische Diskussion haben, die man dann nutzt. Deswegen ist es auch in dem Hinblick sozusagen keine Agenda, dass ich nicht sage, wir brauchen mehr Staatsausgaben. Whatever works. Aber die Agenda ist quasi die Instrumente klar auf den Tisch zu legen. Also Staatsschulden sind, wenn man eine eigene Währung hat, die Zentralbank, wie in Japan zum Beispiel. Japan hat ja auch während der Krise die Staatsausgaben hochgehalten. Und wenn die jetzt gesagt hat, die müssen jetzt die Steuern irgendwie sehr auszugleichen, ist jetzt sofort wieder runtergegangen und die Staatsverschuldung. Die Japaner haben aber ein Problem mit ihrer, ich habe ja nicht singen zu machen, kein Problem mit ihrer Nachhaltigkeit. Die Bank of Japan hat 2017 war das, hat die 70% der Staatsanleihen. Das ist natürlich, aus meiner Sicht ist nicht klar, das Symptom für einen Mangel an Dynamik im privaten Sektor, auch ein Mangel wahrscheinlich an Lohnwachstum. Aber das ist besser als zu sagen, wir machen jetzt die Kürzungspolitik an 25% Arbeitslosigkeit. Das ist meine persönliche Meinung. Aber das ist jetzt total offen sagen. Aber wir hoffen sozusagen, dass die Leute halt verstehen, sozusagen. Ja, ich bin dabei. Genau, vielen Dank. Also zu Hause läuft jetzt der Download.
Ich hätte es auch bei mir über meinen eigenen PC gemacht, weil das WLAN war nicht so langsam. Es hätte nämlich 12 Stunden gedauert, runterzuladen.
Ich habe hier einen 8 GB USB-Stick. Also ich lasse den jetzt runterladen. Meine Frau guckt, dass der Computer nicht irgendwie stoppt. Und wenn der fertig ist, gehe ich da hinten, lade das da drauf und komme nachher zum Kino.
Welcher Größe hast du dir runtergeladen?
Das ist Full HD. In Kopf 4 GB. Das ist ein 8 GB Stick, 4 GB ist der Film.
Okay. War ja genau, ich dachte nämlich auch, dass ein Original auf der Qualität runterladen muss, das wäre dann nicht 12 GB.
Habe ich gesehen, aber das ist zu viel.
Genau. Und ja, mit der Technik habe ich mir alles zeigen müssen, das habe ich dann selbst, weil das kann ich ganz schnell machen.
Okay. Ja, es kommen wahrscheinlich noch 2 Leute dazu, also was war das denn, 8:30, glaube ich. Vielleicht kannst du was hatte ich dir gesagt, 8:30? Ja, ich glaube 8:30. Augenblick mal kurz, schau mal kurz nach. Also
dass ich wahrscheinlich einfach nur wieder mit deinem Laptop oder was auch immer dann ein paar früher da bin.
Brauchen die einen Laptop auch? Ich hätte jetzt eigentlich nur den USB-Stick gebracht.
Nee, dann können wir das, ich habe meinen Laptop bei, dann können wir, also die haben halt keinen Laptop, ich habe aber meinen Laptop bei und dann können wir das über meinen Laptop machen natürlich. Ja. Hauptsache es ist ein bisschen lustig.
Also um 8:30 am Kinosaal habe ich gesagt, das ist mein Bruder. Ja, also mein kleiner Bruder, der kommt auch, wenn sie Karten abreißen. Okay. Ja, dann ist es besser, glaube ich. Ja. Also wenn du gucken willst, dass wenn du um 8:30 da wärst am Kinosaal, dann komme ich auch um 8:30 dahin. Ja. Bring den USB-Stick mit. Ich glaube, in einer halben Stunde, dass da drauf spielen müsste, wahrscheinlich klappen.
Ja, das ist ohne Probleme.
Und dann können wir den Film zeigen, halt im Zweifelsfall mit 5 Minuten Verspätung, aber das sollte hinhauen. Ja. Okay. Jo, vielen Dank nochmal schon jetzt. Super, ohne dich hätte das niemals jetzt geklappt.
Alles gut. Nee, hast ja auch genug Umgebung.
Ja, genau.
Ja, danke.
Jo, danke. Ja, hier kommen immer noch Leute an. Wir warten mal.
Ja, ja.
Ich gucke mal, wie spät es ist. 14:04 Uhr, naja, vielleicht noch nach 5 Minuten.
Also wenn jetzt die zwei anderen nicht da sind.
Ja, genau, deswegen machen wir es jetzt. Wir machen jetzt ein bisschen kürzer. Also, wir können den Vortrag machen, vielleicht stelle ich dann nochmal ein, zwei Fragen dazu und danach können die Leute ein bisschen fragen. Wir machen das so. Tut mir leid, dass gerade ein bisschen, also sonst haben wir 4 Leute in den Sessions gehabt, aber die EZB hat niemanden geschickt. Die waren nicht sehr freundlich, ehrlich gesagt. Und ich kenne auch Ulrich Binzal und den habe ich auch eine E-Mail geschrieben, aber der hat nicht geantwortet. Aber vielleicht hat er auch andere Sachen in die Ohren. Also EZB war irgendwie jemand zu bewegen. Und sich ist ja doch, ich habe auch schon hinten auf meinem Buch hat er auch einen netten Satz zu beigesteuert, also mit ihm in Kontakt. Und, aber irgendwie hat es nicht geklappt, diesmal mit der EZB. Also wie gesagt, die offiziellen Anfragen, da wurden wir irgendwie komisch abgebügelt, auch irgendwie nach der dritten Anfrage erst. Also irgendwie, ja, aber gut, das ist halt, wir sind neu und kennen uns nicht. Haben die irgendwie keinen gehabt, vielleicht hatten sie auch. Wir hatten auch überlegt, bei der Bank of England, wir hatten den Kumhoff angefragt, aber er kann leider genau in diesem Wort liegen, weil er in der Schweiz ist. Das hätten wir ja auch bekommen. Ich hatte Thomas Ryland angefragt, der auch das Papier von 2014 von der Bank of England mitgeschrieben hat. Den kenne ich auch. Der wäre auch gekommen, aber der hatte auch keine Zeit. Aber ja, nächstes Mal kümmern wir uns ein bisschen früher darum, das war jetzt ein bisschen kurzfristig. Dann hoffen wir, dass wir auch mehr Leute haben. Eventuell, ja, ich habe auch mit dem Portfolio-Manager von der Zentrale von Ungarn nochmal E-Mails ausgetauscht. Der war auch interessiert, konnte aber auch so kurzfristig nutzen. Also, ja, wir wollen halt auch nochmal sehen, dass wir die Zentralbank ein bisschen einbinden und dass die dann nochmal hier quasi, vielleicht können wir auch Chatham House Rules machen, dass man hier so ein bisschen Sachen diskutieren kann. Ja, was sind sozusagen die Sachen, die man machen könnte?
Zur Zentralbank, das ist eben hier mit dem YouTube, das ist immer eine kritische Sache. Ja, mal gucken.
Ja, wie gesagt, wenn Sie das ablegen wollen, Sie können auch irgendwann sagen, ich kann die Frage beantworten, aber dann kann das jetzt nicht mehr auf YouTube hochgeladen werden. Können Sie auch gerne sagen. Also wenn
Das überhaupt das Fragen, freut mich sehr.
Ja, jetzt aber.
Helfen mit der Organisation. Okay, wollte ich ganz kurz dich
Ja.
erinnern. Kannst du noch durchsagen, dass wir um 19 Uhr das Treffen im Café Bilderbuch haben? Weil ich glaube, das weiß niemand.
richtig. Stimmt, ja.
Du kannst dann auch den Film noch announcen, weil ich glaube, nach dieser Session werden wir dann alle in getrennten Sessions sein und dann werden wir nicht mehr die Leute zusammen haben.
Ja.
Das heißt, das musst du jetzt announcen.
Und,
Das Café Bilderbuch ist um die Ecke.
Akazienstraße,
Akazienstraße, ich glaube 28. Ich habe es gepostet auf der Website.
Ja, okay.
Okay.
Ja.
Kannst sagen, auf der Website ist die Adresse.
Ja. Danke. Ja, was mich besonders freut, wir haben das ja quasi als europäische Konferenz angekündigt und hatten halt gehofft, dass Gäste aus dem Ausland kommen, und wenn ich das so sehe, das sind sehr, sehr viele Leute da, also Hälfte ungefähr. Und da bin ich auch sehr froh, da kommen auch Leute aus Dänemark und aus Spanien, Italien, aus Tschechien, aus Polen halt, also das ist wirklich ganz EU. Und das finde ich halt auch sehr schön, dass wir uns hier treffen können und halt diskutieren können. Also das von Anfang an so klappt. Ich hatte jetzt auch fast damit gerechnet, dass dann halt eher Deutsche Leute, also eher Berliner kommen und dann ein paar von außerhalb. Das ist doch sehr, sehr gut. Okay, ich glaube, es steigt sozusagen jetzt auch die Spannung. Michi, bist du fertig? Michi, bist du fertig? Wir können das hier hinstellen, wenn Sie wollen.
Können Sie das sehen, ob ich das kann ich dann nicht lesen, schätze ich mal. Das sieht mir sehr klein aus.
Ja. Probieren es mal einfach hier oben.
Kann man das denn überhaupt lesen, was ich da geschrieben habe? Ich muss mal gerade gucken hier. Ah doch, das geht, ja, okay.
Leider haben wir nicht mehr Spielraum bei des Kabels.
Ja.
Auf Englisch war klar.
Ja, okay. Ja, das ist Englisch. Ja.
Okay. Ich sage einfach dann Herr Dr. Sommer von der Bundesbank, das reicht das aus.
Bundesbank in Berlin, vielleicht sonst wenn die Frankfurter, irgendein Frankfurter das mal sieht, dann denkt er gar nicht, was erzählt der hier.
Genau, ich kann nicht sagen, dass Jens Reich hier ist von der Bundesbank in Frankfurt.
Ja, okay.
Das jetzt nicht.
Zum Beispiel, ja.
Okay, yeah. So yeah, thank you for coming back. I hope you had a nice lunch. I would like to make just two quick announcements before we go into this panel. So the first announcement is that we have reserved a very nice room at Café Bilderbuch for 7 p.m. It's possible to eat something there, to have a drink. So Café Bilderbuch is when you walk out of the gate of this building complex, and then you turn left, and the next street you turn left again. That's Akazienstraße, and it's number 28. Café Bilderbuch is also, I mean, you can also find it on your mobile phone. If you don't know how to spell it, ask your German friend on the next seat. Hopefully, that person will explain it to you. Okay. And the other announcement is that we have the movie that will show at 9 o'clock in Rathaus Schöneberg, which has a movie theater, a small one for 80 people. So again, movie tickets will be sold at the registration desk for €5. I think there's still some left. And I think it's a nice movie to see because Stephanie Kelton, Randall Ray, Warren Mosler, some of the original MMT guys from the United States, they appear in this movie. So we were not able to bring them here because it's very costly to do. And because in America the semester just started. So it was probably not possible for them to join us for 2 days. So now in this panel we would like to talk about central banks and modern money. But we have to talk about sickness because some of our two of our panelists are sick, so they both have the flu. So we are now going to talk with Dr. Sommer from the Bundesbank here in Berlin. He will present just a little bit his views, which are his own on modern money. Then we just have a little bit of a chat, and then I'll open the floor to questions and comments. So thank you, Dr. Sommer, for being with us.
Yeah. Yeah, thank you very much for inviting me to this conference. And as Dirk said, okay, I will present my personal view on these topics, and these are not, of course, might not be the official view of the Bundesbank, of course. Not necessarily. we do not know. So I will talk a little bit about money creation and some misconceptions about the way money is created, money is injected into the economy, and you know that the Bundesbank is a main publication in a monthly report, and in April 2017, I think the Bundesbank had an article about money creation in the economy and the role of banks and central banks in the economy. And I will refer a little bit what is written there. And then we might have a discussion on those topics which are interesting for you. So let's start with this chart here. And that gives you an idea why we in the Bundesbank started also thinking about making clear our views on money creation and the role of banks and central banks. What you see here is a chart which shows you the development of base money, which is the red line. And then you have aggregate, the broad monetary aggregate M3, which is the blue line, and the green line, this is aggregate credit in the euro area. And you can see that from 1999, so from the beginning of the Euro monetary union, European monetary union, that all three lines more or less move in parallel. So there's only very small deviation. This is not very surprising, as in normal times, you know, that base money and M3, for example, they have more or less common factors as their determinants. So if you think about minimum reserve requirements, which banks have to hold, then they are based on all of those components of which consists M3. So therefore, it is by no surprise that in normal times we have a more or less parallel movement. But then you can see that after the outbreak of the world financial crisis, that base money growth started deviating from the other curves, and that base money growth outpaced to a huge extent broad monetary growth and aggregate credit growth. And that huge increase of base money growth of central bank money tended to induce some commentators to project a huge increase of inflation in the euro area. So there were some very famous economists, I do not quote any names here, but really famous economists which said at that time, so we expect that inflation will reach double-digit numbers in the euro area in a very short period of time. And that obviously did not happen, as you know. In contrary, we are still struggling with a very low inflation rate, below our target inflation rate. So that is really not the problem we have at the moment. So, and then the question is, of course, why do we have these deviations, and why does base money growth not necessarily lead to inflation in the economy? And we can immediately go to the next chart, and here you see the factors which determine base money growth. And what you see is that, interestingly, we have this. We have here the period after the outbreak of the world financial crisis. It is more or less the blue part of the column, and these are other factors. And these other factors are not those factors which are responsible for base money growth in normal times. So these are not the minimum reserve requirements. These are not. This is not the demand for cash. This is also not what we call autonomous factors, like, for example, which depend on the foreign exchange component of base money growth. You know, this is in normal times more or less zero, as the ECB does not intervene in the foreign exchange market. If you intervene in the foreign exchange market, for example, if you buy US dollars, then of course the banks will receive an entry, you will credit the account of the commercial bank at the central bank. So that adds then to base money growth. So, but that is not the case. In only on few occasions, on 2 occasions in the end, right after the start of the euro, the ECB decided to intervene in the foreign exchange market. But since then, we have really freely floating exchange rate in the euro area. Okay, so these are other factors, and if you have a look at those at the factors driving base money growth, then what you see is that, for example, in 2011 and 2012, that was the time when, after we had those troubles with Greece, that the problem with Greece were spread over also to Italy and Spain. And at that time, the ECB decided, okay, we will buy sovereign bonds of those countries, although the ECB said in a limited amount. And so this, and the program was called Security Market Program, SMP, and that is exactly the reason, or one of the reasons for this increase of base money growth. So the ECB bought sovereign bonds. And of course, the amount of purchases was credited to commercial banks on their account at the central bank. And at the same time, also the ECB offered 2 long-term refinancing operations for 3 years. So normally our refinancing operations have maturity of just 1 week or 3 months. That was the normal case. But we extended maturity after the world financial crisis broke out. In this case, up to 3 years. Later on, we had also refinancing operations of up to 4 years. Yeah, and that, of course, by those long-term refinancing operations, we added a lot of liquidity to the system. And if you look at those banks, at those countries or those banks which received the major share of those long-term refinancing operations, you can see that Italian, Spanish banks received more than half of the total amount allotted to the whole commercial bank system, to all those bidders. So you see, obviously, this has to do with the world financial crisis, with the European debt crisis. And obviously, this has nothing to do with an overheating economy, with credit growing at double-digit numbers, whatever. So obviously, we have completely different causes for this increase of base money growth. And that gives you an idea why base money growth is not necessarily connected with higher inflation in the future. And then you can see, if you go a little bit further to 2015, 16, 17, and so on, you see the big blue bars here. This is the so-called quantitative easing program of the ECB, this asset purchase program. So that the ECB started to purchase assets of all member states according to their shares in ECB capital. Okay, now why is there this complete failure of those forecasts of those really famous economists? And obviously, there are some misconceptions about the role of money and the role of the central bank and commercial banks. And I have taken here two misconceptions. And the first one is that banks are financial intermediaries which lend out the savings of their customers, which is the first misconception. And so, the corollary of this misconception would be that lending is restricted by available savings of bank depositors. So that is something which comes close to the so-called loanable funds theory. And the second misconception is that an increase in the supply of base money controlled or targeted by the central bank results in a certain increase of the monetary aggregate, and that is, in the end, the story of the so-called base money multiplier, which is still a concept used in many of those economic courses, at least I would say in the bachelor studies. So I don't know if also in master studies. Okay, so let's talk about those two misconceptions. So first misconception, that you need deposits which then will be transmitted to the investors when you grant credit. So our position here is very simple. Deposits are created out of thin air, like it is, you can call it, by banks granting loans to non-banks. And that might happen either by direct loans, or the same is true if a commercial bank buys the corporate bonds. That's from an economic point of view, or from a monetary point of view, there's no difference between those two ways of creating money in the economy. So therefore, and this is simply an outcome of bookkeeping. So if you grant a loan, then of course you have to credit exactly the same amount on the liability side of your balance sheet as a bank, and as the liabilities, the short-term liabilities of banks consists or form those monetary aggregates, you have immediately an increase in the monetary aggregate or of money. But there's a problem, of course. If I say banks create money out of thin air, the problem is that banks also do not only create money, they also create a liability. And that is a liability for the bank, because what is a deposit? A deposit is simply a claim on the central bank to provide the customer either with cash or with bank reserves. So there's no big difference. So cash you need if you like to carry out cash transactions. So you go to your bank, you withdraw money, and you take the cash and start buying something. So, and the money, and the bank, of course, has to provide you with that amount of cash. And that, of course, cash requires that the bank has sufficient amount of money on their account at the central bank. So, like you demand cash from your bank, commercial banks demand cash from the central bank, but they only get cash from the central bank if they have sufficient amount of money in their account, or if they borrow from the central bank and then use that money, which is credited on their account, to provide their customer with cash. And the same is true, of course, for reserves. If you like to transfer money because you bought, I don't know, a car, and you like to transfer the money to the bank of the car seller, then of course you give an order to your bank to transfer reserves to the bank of the car seller. So that is what's going on. It's not the deposit which is transferred, it's the reserves of the banks which are transferred to the bank of the car seller. Why? Because the bank of the car seller now has the liability, the increase in the deposit of the car seller, and now they have the liability maybe to pay out or to provide their customer with cash. So they need reserves at in their account at the central bank. Okay. So therefore, although we have this deposit creation out of thin air, it at the same time creates a liability of the bank, and that of course is something which a commercial bank always has to take into account, that it is able to secure that it has access to reserves. This problem for commercial banks you can handle by deposit management. But first, in order to define or to describe this liquidity problem of commercial banks, so the point here is first that by granting a credit, you immediately have a maturity mismatch. So you grant a loan, normally this loan is long-term, or in many cases it's long-term, and by granting this loan, in many cases you have very short-term deposits. So there's immediately a maturity mismatch. So, and if you have this maturity mismatch, that implies that you have a problem. So if you have to provide your customer with cash, or you have to provide another bank with reserves, then of course you have the problem that that either you might have access to reserves, but you do not know at what price. That is a problem. So first you have an interest rate risk. So the interest rate and the money market, which is the interbank loan market, might rise, then it's a problem, or it might fall, then you might be happy in the end. But you have an interest rate risk. And you might even have a liquidity risk that is normally, maybe for most German banks, not really a big issue. But if you think of Italian banks, if you think of Greek banks, then of course you know that they were not able to borrow in the interbank credit market. Impossible. They lost completely access to the European money market. And then they have a liquidity risk. So therefore, banks, in order to avoid this interest rate and liquidity risk, what they do is they conduct some kind of deposit management. So they try to attract, for example, long-term deposits, saving deposits, time deposits. They sell bank bonds, for example, in order to be sure that they have enough liquidity for a long time at a fixed price. So that would be exactly or that is the reason why banks offer saving deposits or time deposits or sell bank bonds to the markets to avoid exactly those two risks which I mentioned here.
Would you allow intermediate questions?
Yeah,
or-
okay, yeah.
because they seem to have stopped that now. They've done what you just described, this attracting of long-term savings by having sort of attractive interest rates. Banks have done that in the past, in my youth and my sort of year, but nowadays that doesn't seem to happen anymore. Why is that? Why is that?
Yeah, that is that is a German point of view. That's exactly what's going on here in Germany. You know that we had a huge redistribution of liquidity from crisis countries in the south of Europe mainly, and a lot of capital has flown to Germany. So German banks, they are really awash of liquidity. So they have really.
England is the same thing.
Sorry?
I live in England, so it's the same thing there.
Yeah, I'm not sure about the situation in England, so because that is out of the euro area, so there's something different because here you have the exchange rate and you have a Brexit discussion. German banks, you know, Germany is something like a safe haven for many investors and for many depositors, and many of them, they were maybe not sure about the future of their bank, of the Italian bank, whatever, and what they did in the end was they shifted money to German banks, so they received a lot of liquidity, much more than they needed. So therefore, the interest rate, of course, on these savings banks, and additionally we had also, of course, these. we had a lot of. Additionally, we had this QE program, so we have really a lot of liquidity in the system, and therefore, interest rate on those savings deposits are more or less zero. So depositors, they are more or less indifferent between holding an overnight deposit or just or saving or long-term deposit. Okay, and now we come to the second misconception concerning the working of the central bank and this money multiplier story. So first, very shortly, what is the ECB doing? The ECB, our primary objective, of course, is price stability, the euro system. What we do is we try to achieve price stability not by targeting reserves, but what we do is we try to adjust or set our short-term interest rate, the interest rate normally of our main refinancing operation, so that in the end price stability will be achieved in the economy. That is the way it is done. So we have this rate of main refinancing operations as our instrument, and our operational target is the interbank short-term money market interest rate. It's the EONIA. It will change in the future, but right now it's the EONIA. What you can do is you can just do one. You can control the interest rate, or you can control the amount of reserves. And as we follow the short-term interest rate policy, of course, reserves have to adjust. Otherwise, you would have a change in money market interest rates. So therefore, what we do is we provide the banks with the amount of reserves they require at the given policy rate, and of course the precondition is that they are able to present eligible collateral, so with a certain rating and things like that. Yeah, normally what we do is what we did before the world financial outbreak of the world financial crisis was a kind of liquidity forecast. So we tried to estimate what is the liquidity demand of banks, and then we provided the banks exactly with this amount of liquidity. And if our forecast turns out to be correct, then the interest rate in the interbank money market should be very close to our key policy rate, and then we exactly transmit our monetary policy stance to the money market. And from the money market, of course, it will be transmitted then to the long term, to the capital market, and then to the real economy, and will in the end then hopefully also have an impact on the inflation rate. So that is the way normally it works. So what are the determinants of liquidity demand? I already said we have cash, we have minimum reserve requirements, and then we have so-called operational balances. So before the world financial crisis, those operational balances were almost zero, as the interbank credit market worked very efficiently. So if you decided to transfer money to another bank, and as I said, you need a transfer of reserves. Normally, banks did not have to transfer the reserves; they simply borrowed reserves from the bank which received, the bank of the receiver of the money. So in this case, there is no movement of reserves. So it's just on a credit way, yeah? So therefore, operational balances were almost zero. But that changed, of course, during the world financial crisis, as with the world financial crisis, there was a loss of confidence among banks. One bank did not know if the other bank will survive or will exist the next day. And therefore, they were reluctant to borrow to each other. So the interbank credit market completely dried out in the end. And in order now to carry out transfers in the economy, then you have to borrow from the central bank. So the demand of liquidity went up. And that, of course, was very difficult now for us to make a correct forecast of this increased amount of liquidity. And interestingly, if you have a look at this chart here, what you see is that you see the collapse of Lehman Brothers, the first red line, and you see that after the collapse of Lehman Brothers, when mistrust and confidence broke down in the interbank credit market, the demand for liquidity went up. We also saw this. We distributed a lot of more money to the banks, but obviously that was not enough. Because if you look at the blue points in this chart, you see that money market interest rates went up. And that, of course, was not intentionally. That would be really irresponsible in a crisis to raise interest rate. That was simply because our forecast was wrong. So we underestimated the additional demand of liquidity. And therefore, and that is the second blue line, we started with a policy of fixed rate full allotment. So we provided the banks with the amount of liquidity they needed. As I said before, given that they have enough collateral, and because many banks did not have the required quality of collateral, then we lowered the minimum rating for collateral. So that should not be a restriction in the end. And so what I described here is it's a policy of interest rate. It's an interest rate policy what we do, and it's not a reserve based policy. And that is therefore I made this chart here. This is also true. Maybe that's not clear in the first moment, also true for the quantitative easing program. Because if you read what the central banks published, they said, okay, every month we will buy 60 billion of sovereign bond, corporate bonds, asset-backed securities, and so on per month, 60 billion. So therefore you have a fixed amount of reserves which is injected into the economy. But that was not the main point here. The amount of liquidity we injected into the economy had to do with the impact of this liquidity on exchange rate, on bond yields, on share prices, and so on. So it was, even under the QE policy, the quantitative easing policy, it was not the amount of reserves which was targeted by the central bank. It was the impact of those reserves on macroeconomic variables, as I said. So also in this case, the central bank tried to control interest rate, in this case long-term interest rate, to have a more direct impact on long-term interest rates and not the amount of reserves once more. Okay, now as I said, that's my last slide here. I said that banks can create deposits out of thin air. Does it mean that money creation has no restriction, is unlimited? And that obviously is not the case. We have three restrictions on the expansion of credit in the economy. First, you need to have credit demand. And credit demand depends on many factors. I have listed here some: sales prospects, profit opportunities. Of course, credit terms and conditions are important. Indebtedness, very important point. So that is one reason why interest rate policy in the euro area was not that successful after the European debt crisis, because we had a high level of indebtedness, especially in the private sectors in many countries. So credit demand on the one side, but also credit supply, of course, because credit supply also depends on risk and return considerations. So credit standards play a role, the interest rate margin, of course, collateral and funding cost, and so on. And last but not least, also monetary policy, of course. The impact of monetary policy, so the impact of our short-term interest rate on long-term interest rates, on monetary growth, so the broad aggregate of monetary growth, and on credit growth, that of course has an impact also on credit expansion in the economy, and therefore will put a limit on the expansion of credit supply. So therefore, we have restrictions, but that does not necessarily rule out that we have sometimes where we have excessive bank lending in the economy. So this is the question of the financial cycle, boom-bust cycles. And in order to deal with that, we have additional instruments in the area of microprudential supervision, and especially right now, and also part of the mandate of central banks, the macroprudential supervision and regulation. So yeah, that would be my presentation, and then I'm looking forward to your questions.
Thank you. You discussed this so thoroughly that I have no questions myself. So given that we have only 20 minutes left, I would think that the floor is open, and maybe Miguel can start.
I don't know if I understood what you were going to this, but you started by saying...
Perdona, más alta, por favor.
Yes, you started by saying increasing the money base hasn't led to increasing inflation, and I was expecting a sort of explanation of why you think we're not hitting the inflation target. I haven't heard anything about that, so I'd appreciate if you could talk a little more about... I mean, you talked very nicely about the mechanics of how the Bundesbank and the ECB manage liquidity and reserves, but having said that, you increase the money base to 2 trillion, and inflation still, core inflation is still at 1%.
Mm-hmm.
So why?
Yeah. I would say there are two points to be made here. The first point is that we had an increase in base money demand because of this malfunctioning or drying out of the interbank credit market, the so-called money market. So if the crediting among banks does not work anymore, of course, each bank has additional demand for liquidity. Because in this case, you really have to transfer liquidity to the bank where your customer likes to transfer money. Yeah, and that leads to additional demand for base money, but has nothing to do with additional expenditures. So therefore, this has no impact on the economy. It's just, you might say it's a technical point, but it's something which has to do with confidence among banks. So it's I would say it's an indication that obviously you have tensions, you have problems in the banking system. That would be my interpretation. And then we can also talk about this quantitative easing program. Yeah, we have injected a lot of money into the economy. And as I said, the main impact is on long-term interest rates, on share prices, in some cases even on prices for arts, whatever. The problem with that is that it has to do with funding costs for corporations, for companies, for private households, whatever. And the problem is here that, as I said, the big problem from my point of view in the euro area is that we have still a very high level of private indebtedness. And yeah, you can think about that. If you have a high stock of inherited debt behind your back, then of course you might think, even if the interest rate is zero, you think about, or you think twice before asking for additional loan. And that's exactly what happened. So, and as long as the recovery in many, and that was the main reason why interest rate policy is not that effective and why the recovery is slower than maybe in case of a normal business cycle. And I think this point was already made by Reinhard and Rogoff, I think, in their famous book, This Time is Different. They explained in detail that a financial crisis is to some extent different from a normal business cycle, and the recovery needs much longer, needs more time than in case of a normal, whatever, supply oil price shock or whatever, what might drive the business cycle. Yeah, I don't know.
Please. Okay. So if central banks know that the main problem to credit expansion is private debt, or as well commercial debt, mainly private debt more than 200% of GDP, then why they're still pumping money or buying loans, buying assets from the big companies, pumping up share prices and real estate prices instead of neutralizing the private debt. That, of course, that would lead to a boost in economy. And what we have seen during the last years was just the boosting the bubbles that have collapsed before in 28. And the last monetary conference at ECB in October, I was astonished because they admitted that the QE didn't save the purpose. They don't know why, and they don't know what to do now.
I'm not sure if that was really the answer of the ECB, because the ECB published.
The speakers invited there.
Okay.
To the conference.
I know of at least some publications and some studies by the ECB, and they have shown that the QE program was to some extent successful, but it was not sufficient. So it was successful. It is always a question what would happen without. Nobody knows, of course, but their main argument is
that of the 1 trillion euros that went to the real economy, and more than 19% that went into the public economy.
Yeah, the main argument is that without this QE policy, you would have higher interest rates, you would have less investment, you would have even a longer slump, you would have probably deflation. So their main argument is that they avoided getting into a period of really heavy deflation, and you know that deflation is difficult for a central bank to handle. So therefore it's difficult to say, because it's something we cannot really prove because we cannot do the experiment. So we just have the path of interest rates and the path of policy which has been applied, but not the counterfactual case. So, and my point is that why is it that bad? So if, of course, we know that if you continue for a very, very long time, of course, you have side effects, negative side effects. We know that. But my argument is always, okay, if you stop this policy now, what would be the consequence? Is it too early to withdraw this expansionary stimulus? And yeah, it's always you. There, of course, there are commentators mainly in Germany which say, okay, now that it's time to withdraw the stimulus, maybe to reduce the balance sheet, whatever. So I would not agree in this case. I think that at the moment, I think we are. I think it's a good idea to continue a little bit, and you know that even in the United States they revised their interest rate path, so they delayed further interest rate moves to the future. So from that point of view, I'm not that skeptical, at least. So, but as I said, of course, interest rate policy was less effective than in former times. That is true. Yeah. Yeah.
As an answer, I have two questions related to your presentation. My first question is, when do you expect an increase of the velocity of money in the Eurozone? My second question regards the future.
Could you please speak to the audience, because they need to understand
When
the
do you
question.
expect the increase of the velocity of money in the Eurozone? This is my first question. And the second question is regards the future of the Eurozone, because the recovery after the Great Recession was strongly dependent on the new economic governance, which was basically dependent on the ECB non-standard expansionary monetary policy. So my second question is, do you expect during the next recession the implementation of further measures of integration in the sense of fiscal risk sharing in the Eurozone? Thank you very much.
Okay. So I don't know if I understand you. You were talking about the velocity of money. Normally, this is a technical term which describes the relation of nominal GDP to the broad monetary aggregate, whichever one, M1, M2, M3, whatever. So I'm not sure. So there's no, as you know, there's no big we have a slight decline, but since long time, yeah, that's a long-time decline of not in the United States, but here in Europe we have it since very long time, a decline. The velocity of money, that has more to do, I think, with with the technical developments in payment systems and things like that. So what I was talking about was a money multiplier. That is the relation between central bank money and the broad monetary aggregate. That's something different. And here, my answer would be, I expect an increase of this so-called money multiplier, although without with reverse causation. As I said, I expect that it will increase if we have solved the problems in the banking sector, and you know we are far away from that. So you can read in the newspapers every day. You hear about problems in the Italian banking sector, now also in the Spanish banking sector again, and even here in Germany, if you read about the Deutsche Bank, so that also does not sound very nice, but. So from that point of view, I expect if we have quite a sound development in the banking sector, I expect that the money multiplier, this relation, will go up again.
Andrea Felsi?
Yeah. No, I thought it was important to note that when you say that money is created by thin air, this applies to a non-convertible currency. Redeemable but non-convertible currency. If you have a currency on a currency board, for example, the dollar currency board, then you can create loans out of thin air. And this, of course, ties to the money multiplier. The money multiplier applies to convertible currencies. It does not apply to non-convertible currencies. So I suggest, you showed us a graph where you have the monetary base multiplier, and I understand this is a ratio. So why not you call it just a ratio? Because I propose that we trash the word multiplier. There's no single document of the ECB or the Euro system or all national central banks in the Euro area that explains the QE on the basis of money multiplier. Nobody at the ECB has ever argued that the idea of the QE is to provide more reserves so that that more loans can be made. So the money multiplier should be trash completely from my language, except when we discuss convertible currencies. I was at the conference with a famous economist arguing that the quantitative easing would be inflationary, and this economist, I would name, is famous for a monetary policy rule. And I asked him directly, where does it come from, this idea that money, and I didn't have a recording device, and I just wrote very quickly the answer, so I have, I got every single word. And I can read it quickly, but I think it's impressive how poor the argument is. You would expect, a guy like him, a question like this, which is such an important question for monetarism and all that, would have a strong answer. We do have theories that connect money to inflation. Yes, it is not simply this channel, okay? It could be expectations. When excess reserves translate into money supply expansion, inflation becomes a risk. At that point, the Fed should reduce its balance sheet. But the question is, how long will it take? Also, QE makes financial markets aware of a signal that interest rates will remain too low for too long. So it's interest rates, not the reserves. And please don't forget the international effect. Emerging countries are finding it more difficult to raise their own interest rates to prevent inflation, so inflation is spread from there. The inflation effect of QE is not the inflationary effect of QE is not instantaneous, although we begin seeing it now in commodity prices. In any event, inflation risk remains a concern. This is his answer. That's it.
Yeah.
That's constant with what I said. I've not do.
Yeah. First point, I fully agree. That is, that is. Everybody knows if you talk about the money, base money multiplier, so then we all know what is meant. But as I said, we in the central banks we do not believe in it. So therefore, I fully agree. And concerning the QE policy, we also have some negative side effects of this QE policy. As I said, it's not. It's not totally innocuous. So if you follow this policy over a long period of time, of course we might see inflation in asset markets. That's what we already observe, and where we are going to see where it's going to happen. Because if you buy government bonds from whoever, and this institution buys shares or buys real estate, then of course the prices will go up in the end. And if this is not sustainable because prices will go up, then you have to increase rents in order to have a profitable investment. If your customers will not be able to pay the rents, then you might have a problem in the future. So it might be a bursting bubble then in the end. So therefore, I would not agree that it's. I would agree it's a policy which is appropriate for the situation of the euro area and for the situation after the world financial crisis. But I would be very reluctant to say that would be the future of monetary policy. So I think we should stick with our interest rate policy in normal times. And what we think now is, and what is the discussion among central banks, is we go back to our policy of so-called corridor of interest rates. So we try to steer the liquidity supply so that interest rate will remain in a corridor, or if we leave excess liquidity in the system, so we do not bring back our balance sheets to the old numbers. So we leave excess liquidity in the system so that the money market interest rate will be fixed at the deposit rate, so at the lower bound. I'm more in favor of this corridor system because I think with the excess liquidity system, you have no need for a money market. The money market will be out of function more or less. And so I think that the money market is a very important market in the economy because it shows immediately and very quickly if you have sound or unsound bank. And it works like a disciplining market disciplining banks in order to follow sound policies. So from that point of view, but that is my personal view, of course.
Yes, thank you for that, because we're running out of time. I will not allow any more questions, so thank you, Albrecht. And we have a coffee break now, and online and also in the program, which is on the table over there, you find the rooms for the sessions. They're now online and over there. So yeah, I'll see you in the presentation sessions in half an hour.
Hello, sir.
Yeah,
Good afternoon.
hello.
My name is Andrei.
Yeah, hello.
I'm a macroeconomist from Romania. It was a very interesting presentation. And if you do not mind to send me by email,
I can do that, yeah. So I give you my personal card, and so in case I forget it, but I don't think so, but you can,
okay, I'll send
you can send me a
next
reminder,
week.
yeah,
Okay.
exactly, yeah.
So what do you think about the future of the Eurozone in terms of policy moves? Do you expect,
Yeah.
I mean, another crisis is at the corner, global end of the cycle?
Yeah, but, nevertheless, we were already discussing this point before our session here. So I'm a bit more optimistic. I think, yeah, we have those problems. We have those problems in Italy, but in the end, I think that the EU Commission will turn on a more soft, on a soft stand. Yeah, the new European, but also the old. In the end, this is negotiation. So first you play hard, and then in the last night you offer some room of maneuver, and then
ECB is going to reintroduce normally.
we don't know. No, at the moment I think the ECB will stay hold with everything. So we keep excess liquidity in the system. So it's still very expansionary, but we increase not the expansionary stance, but we leave it at that point.
Consolidation.
Yeah, and I think nowadays, I think everybody agrees that probably in this year we will not see any interest rate moves, probably. But
probably next year too.
okay, I'm not sure about that, but let's see.
Thank you very much, and hope we keep in touch. Maybe.
Yeah, okay.
Thank you.
Yeah, I will do that. Wir haben sowas mal gemacht für für Bundestagsmitarbeiter. Da haben wir das mal gemacht, ich glaube für Journalisten, aber ich will jetzt nichts Falsches sagen, nicht, dass ich da was nicht mitbekommen haben sollte, dass das Frankfurt gibt, weil ich bin ja aus Berlin hier. Ich meine nicht, ehrlich zu sagen. Ich weiß aber, dass ich Herr Weidmann regelmäßig natürlich in den Wirtschaftsjournalisten trifft, aber auch hier in Berlin. Einmal im Jahr ist immer im Sommer, wo dann so ein bisschen Hintergrundgespräche geführt werden. Aber das ist natürlich ein ausgewählter Kreis. Also da weiß ich jetzt nicht. Aber warum sollten die Deutschen da nicht durch der Sender sitzen? Ja, wenn Sie mir Ihre Karte hinterlassen, kann ich gerne das an die Kollegen in Frankfurt vorbeigeben, dass Sie gleich in aber nicht so groß.
Before, it was like a cat, you show a cat on the video, the cat is like a cat.
You want to put something on this?
Yeah, I have a section.
Yeah, okay, so here, this is
I've always thought my cat watching car race. And the guys go around, the cat goes around them to see where the cats are going. So Felix will used to be like that, it's a video, he will be behind the screen to see where the person is. This was different, he was actually interacting with the screen. But he was a little bit deaf. So I'm not there. I'm really upset about being away for 5 years.
Driving.
I wasn't going to say with the speech for 5 days. He pointed to where normally European seats and said,
And then there's the balance with governmental debt.
I was speaking in Valencia, my former flatmate, he had a baby.
Only have to read maximum 3 instruments of project debt.
We saw the baby, and we spent a gonna have certain playgrounds,
Otherwise you're all
river,
and they did, and then it was the first time from
Ist natürlich auch nicht Wirtschaft, and it was my question about this. I want to go back to Valencia. When to the I want to get in the bus. At some point, after you go into aggregate demand, it didn't play. Okay, let's go and it increased inequality when she works, she's very sweet. Sometimes they normally it's showing
expectations, manage expectations, that's their main fault, and they're obsessed with managing expectations.
Außerhalb finanziert, das ist ja
Well, central bankers are in real trouble because for decades, for them, their inflation was spent and high interest rates.
Das ist schwierig. Ja, das ist
the opposite.
Klar, aber welche Kosten?
Interest rates must be low, and they try by all means to inflate what they're not capable of doing. If they understand the process, they don't understand the process. If they're obsessed with public debt.
Wobei gut, klar, irgendwann ist natürlich die Kaufkraft auch beschränkt.
Dann kommen wir natürlich zu Fragen, ich weiß schon, wo das hinläuft, in Richtung Lohnpolitik und diese ganzen Geschichten, aber wenn wir uns jetzt da auch noch einmischen wollen, unser Chefvolk wird ja übrigens einmal gesagt, also 3% Lohnerhöhung wären für ihn, glaube ich, kein Problem, oder ging genug dann los. So, und auch
The main problem is wages, and no one, especially in Germany,
Ja, ist schwierig, aber
anyone of the
unabhängige Zentralbank muss
bureaucrats
immer relativ
will
sich wirklich,
solve
das ist der Preis der Unabhängigkeit, dass man da nicht
low
nur
wages, and
aber wie gesagt, für die Trennung von Staat und Zentralbank gibt es viele Gründe. Da muss ich sagen, ich habe so ein bisschen
and they say Germany is the best model to get more competitive, and they don't understand that competitiveness is a relative model and not an absolute.
Hi, so introduce myself.
Economies kids.
No, I noticed the
Because the question is
website
then who?
video about how
And Germany in the
there is also publications, educational
yeah.
publications. So in case I have some questions on this one, can I?
Well, they anyway do so.
I have contacts at ECB, my I consider him
Without
friend.
any
We never met, but we
can't be a competent. They panic over money.
I never met him, but we are keep in touch. And
Baker's holiday.
I had another question, but I didn't ask. That was your personal.
We will take care of
for making the
So,
euro area,
when
the euro
city
currency.
all the new
Deposit insurance as well.
including the cities,
I mean,
constantly say, recently, most recently, Draghi said,
ties up with
so before Christmas,
to
go with the EU Commission
for
more
always
competitive by means of
nothing prevents you. So it's a political decision, which of course could be bad.
more austerity,
I also read about these ideas of modern monetary theory, which I didn't know before. So, a little bit, you can do this. You can also provide banking by monetary financing, but I would be
But you see the fiscal instruments
smart guy, Mr. Trump, he got a clue. He said, just, well, if you like to compete with us, we're setting access rates. And exchange rates are not in our control.
That's also an issue but our point is, of course, you cannot start this with a lot of bad loans and bad of risk in the balance sheet of Italian banks and so on. So first you have to clean it up. So no German banking system completely decline to take part.
Well, you know, it takes 80 cards.
Very difficult.
The argument was, let's proceed to fix the gas.
I also agree that we need concerning the common fiscal policy,
It's just too restrictive for the euro area.
Yeah. The problem is that those who like to have something like common fiscal policy, they just like to have one part of common fiscal policy. They just like to have common funding, but they don't like to have a shared responsibility for public expenditure. And then of course what the Bundesbank doesn't like. They said, okay, if you take step one, you also have to take step two. So they don't really joint fiscal policy at all. But that would be, I would say that would be a full agreement. What is the difference between a full-fledged fiscal union and then my question is, if you look at political developments all over Europe, Europe is not really popular. And this is proposed really political union that would be, I think the next elections will not survive. So, but there is also official Bundesbank. That's the what we say. If you like to have this fiscal union,
It was a political position before the euro.
yeah, what we do not like is to have something like Eurobonds, but without responsibility for public expenditures, because then incentives are a little bit misaligned.
Okay, so it makes
Okay, Ja, das, also die Sterilisierung ist ja, da hat sich ja heutzutage gegeben, das war ja nur für die Präsidentschaft oder für das, weil man Angst hatte. Aber der ist zwar sterilisiert, aber sie hat jetzt für den Fall von Volksverteilung, sodass es zwei ja, die ist ja, das war diese Fixrate 95. Es gibt zwei Positionen.
Ja, eigentlich war es ein
Also insofern war das
man hat halt schon Excess Reserves und so ein war das quasi nur so ein Statement, das gemacht werden muss.
Ja,
fact go the other way. It could put speculators in position of a possible one-side risk only. That's difficult to change. So that I think that would be a risk. I personally don't see any society benefit. Unless maybe it's a soft approach, like it seems you're suggesting. Basically, the central bankers are supporting each other and they coordinate their moves, maybe.
Here is no joke.
zu probieren, oder wie Sie?
Bitte?
Haben Sie Ahnung, ob man das probieren könnte, ob es kompatibel ist? Das Problem ist
Ja,
ja
das
immer, wenn
einfach
es
mal-
nicht läuft. Ne?
Ja, ich werde es jetzt einfach mal kopieren. Okay. Schauen wir mal. Ja, ich glaube, das geht.
Ja? Darf ich mal?
Ja.
Sie kennen sich besser aus.
Wann will ich?
Wer ist denn hier der erste Präsenter?
Wo gehe ich da hin,
F-
um das zu öffnen?
Ja, es ist ja automatisch. Ich weiß es nicht genau. Wir beide sind es nicht.
Ich glaube, ich bin auf Nummer 2.
Zweiter Session 2.
Okay, dann ist es Miguel José.
Sorry about discussing the
No, it's fine.
Parliament idea. We'll have to think about it. I'm saying it's absolutely crazy.
Is he there? Sorry, Miguel José Afona Sanchez.
Oh yeah, Juana. He's
Ja,
I would like to meet him personally. I don't know who he is.
He's supposed to be the first presenter.
Is he? Oh, but he's not here.
If not, Hubert is the first presenter, which means, well, if Miguel is not here, okay, wir können auf Deutsch reden. Ne? Also, wenn Miguel nicht kommt, dann seid ihr zu viert und habt quasi 90 Minuten, das heißt also quasi 20 Minuten pro.
80 jeder.
Also, also 20 Minuten, also 15 Minuten Präsentation, 5 Minuten Q&A und dann Wechsel, dann müsst ihr das ziemlich abwarten.
Gibt's mal, ist ein Moderator oder was da?
Nee,
Okay, müssen wir
Chair macht
selbst.
sozusagen die
Ja,
Moderation. Das ist,
er ist Chair.
ja.
Gut. Er winkt ab. Wie wird das jetzt übertragen? Hier, ich kenne mich nicht aus.
kopieren vom.
Dann einfach hier diesen Griff F10. Oder hier F5, warte, das ist
Sie-
das fehlt hier. Genau, und hier ist Presenter View. Ja.
Okay,
Mit F5 und mit Escape kommt man da wieder raus aus dem Modus, wenn man das möchte. Ja, mit Escape ist man dann wieder
da
so.
lasse ich mich drin. Ich bin
Und F5.
Okay, jetzt lasse ich es mal so, wie es ist.
Genau.
Würde ich dann anfangen im Falle?
Dann würde es.
Ich glaube aber, dass der da ist, oder? Ist das nicht dieser Spanier mit dem Zopf?
Das war Miguel, der vorhin die Frage von da gestellt hat.
Der mir,
Wer wird es sehen?
Das ist aber Miguel. Das ist Miguel Kagan Alvarez.
Okay. Okay.
Schauen wir mal.
Okay.
Also 20 Minuten inklusive.
Can you maybe close the door there, please?
Soll ich auf die Zeit schauen oder soll ich auf die Zeit schauen, wenn die sagen, was
Ja, das wäre gut. Ich habe zwar hier, aber okay.
Also nach
20 Minuten, ne? 15 Minuten so.
ja, 15 Minuten.
Yeah, okay. Good afternoon, ladies and gentlemen. My name is Hubert Hieke. I wasn't sure whether this session is in German or in English. The slides are in German because I was under the impression this is a German session, but as you realize, I will give the pep talk in English. Nevertheless, I moved the slides on. For some it may be a little bit confusing, but hopefully not too much. I have looked into the employment as a last resort a decade ago. Had some criticism about it, and recently I realized that this job guarantee program has kind of evolved, or the suggestions, and I want to make some remarks, and also some remarks with respect maybe to Europe and Germany. Since we have about 15 minutes, I just indicate what my ideas are. Lo and behold, you will see, I think, these job guarantee suggestions move in the right direction, but on the other hand open up a few problems, or a few problems will arise, which I think some of the job guarantee supporters kind of overlook, minimize, or based on the fact that they say, since we have MMT behind, and this should be understood by everybody, a job guarantee program wouldn't be a problem. Okay. Initially, the employer of last resort, I considered rather as a workfare, sorry. As I said, I didn't think I would talk in English anyway. As a workfare program. That's what I considered it, even though it's not in a harsh fashion. Because initially the idea was people have to utilize the jobs that are being offered, and there are restrictions and even pressure on them. Things like 3 strikes and you're out, American baseball, and so on. It was argued that they should be relatively unattractive so they don't compete with the private sector and so on, the jobs. And that they are voluntary. Freiwilligkeit was basically, it was called voluntary because people are not in the end forced. Obviously, if you're a football billionaire, millionaire, right, currently without a job, you don't have to go into the program. But it was not that clearly defined what happened to those people. This has changed. The income was very moderate, roughly the minimum wage in the United States. On the other hand, it was a job guarantee. Everybody could participate. Already there was the suggestion that it would lead to full employment, which I call statistical full employment at the time, because it looks like that, but the question is that due to workfare, or is it something we would call, or I would call, as a post-Keynesian economist, full employment, where people have still kind of choices left. Budget restrictions don't exist. This is very close to the MMT. What workfare in fact is and how it is defined, these are the attributes you have to, if you receive income or some kind of support from the state, you're supposed to offer work or contribute to society, and otherwise they can reduce or even abandon the welfare from you. And the initial system, I considered what the employer of last resort people suggested, very close to what also in the discussion in Germany, in the welfare reform discussion around 2003, 2005, was considered by mainstream economists in Germany as workfare suggestions. For example, the Berlin Institute at the time, run by Zimmermann, right, who is now with the Labor, still with the Labor Institute. He basically argued we can guarantee jobs, right, even for life, and we can then also have a minimum wage, and we just lower or even abandon other welfare. And the IFO Institute in Munich, right, Sinn and others, suggested, why not have a workfare system, of course, for that, in order to make sure that it is not too costly, lower the current system of support, of welfare support, and basically have then communal work and so on at a €0 basis. So you get basically what you work basically for nothing, but since it's workfare, you have no choice. So the initial last resort, employment of last resort, I think was pretty much what was in mind, pretty much a workfare system. Nowadays, this job guarantee program, I looked at it and the discussion about it recently, I think moved to some extent in a different direction and away from workfare. It's much more open. On the other hand, it opens new questions that need to be dealt with, and I think some of the job guarantee people don't realize that political support possibly will only be achieved if, in fact, they deal with these questions considerably. Some of the things, it's not a complete list, would be, in fact, what would be, let's say, the hourly wage? Roughly 15 euros are now suggested. Is that something that is reasonable and find support, for example, in Germany? I have my doubts. We are currently at a minimum wage of 9. I'm not saying that the minimum wage should be considerably higher, but 15, this is what not even the party, the left, right, suggest. Is that something realistic? The issue is, it seems that now fair work is the issue for the job guarantee people. But fair work is based on what the United States you would receive in benefits and a bit above for a family of 5, right? So we are talking roughly, I would say in Germany, at least 30,000 euros a year. That 15 is not even enough to achieve that. Would you then stagger wages based on whether you're married, whether you have kids, and so on? That needs to be dealt with. Otherwise, I don't think there will be political support. What kind of jobs are being created? Substitutability. Of course, there is an ongoing discussion, but I think to some extent that needs to be dealt with still needs to be dealt with. Productivity issues, are they really irrelevant, or to what extent are they irrelevant? And if you have no limitations, if you look at the EU, could a single country even implement such a policy of job guarantee? If you really say, okay, whoever is an EU citizen residing in Germany will be guaranteed a job that pays 30,000 a year. Not that I'm necessarily morally or so on against such a payment, right, or such an income, but is that feasible? Or does that automatically mean you can only implement it Euro-wide? and automatically mean what do you do with the fact that standard of living differs so much. The next thing is the system is supposed to be anti-cyclical, so supporting in a way and evening out the business cycle. Do these jobs then fade away? Are these jobs necessary? Not necessary. Are they that are additionally voluntarily by communities and so on created? Do they then disappear? Do we collect garbage only in a recession but not in the parks when the economy is booming? Is collecting garbage something we want to have, and therefore it should be paid, and the state or the community should offer regular jobs right away for it? Should we expand that sector, period? And a good argument can possibly be made. Helping reading to the elderly, reading in elderly homes, or doing something, services in elderly homes. So during the boom, nobody's there doing reading, whatever, supporting, and in a recession, they are flooded with people that then do the job in elderly homes. I have at least partly my problems with it. So what is fair work and what is a fair wage? What means voluntary? What is within the EU at least the aspect of universal job guarantee and the anti-cyclical? If you see the list that is still up as an nowadays, and not much different from the old ideas about employer of last resort jobs, neighborhood cleanup, low-income housing restoration. These are all things that are quite necessary. But if they are necessary, why don't we have them right away? Environmental safety monitors. Do we monitor more during a recession and less during the boom? Artists and musicians, right? I leave it up to you. I'm not saying that these are not ideas out of the best of all intentions. I just wonder if they are practical and if political support can be found for it that way. I give you some examples from the past when it comes to Germany. We had programs, of course not a job guarantee program, but long-term unemployment support programs. I know cases where they hired people and then substituted mowers, right, with mechanical, right, mowers, so 20 people mowed the lawn, right, instead of using a machine. I know cases where you see at the German railway, whenever they stop the S-Bahn or the S-Bahn in particular, if it's a turn, if it's a curve, right, once in a while somebody's there, right, I call them yellow jackets now because they remind me of some protesters in France, right, and they hold the signal up, right, yeah. I have seen that sometimes. I was very surprised and looked into it. What happened there was a job support program, right? But then the next day, obviously, the S-Bahn still goes, there's no one there. So, I mean, what do we need that for? And is that then a job that also, which I in a moment will call a job that where people feel competent, where people have kind of authority, where people have also a social inclusion, right? A binding to that job and to the workplace. Or is it just that people basically have something? And if that's the case, is then really a job guarantee program superior to unconditional basic income? What clearly differs now is that the job guarantee supposedly pays a wage or a salary at least above other family support. But again, in Europe, in some countries, that would mean 30,000 plus a year. Time? Okay. So I think to some extent his ideas or the job guarantee programs are moving in the right direction, but open up new problems that need to be dealt with. It's not workfare anymore, it seems, but are they politically realistic in a way that they can be introduced on a universal basis, at least nationally, regionally, or EU-wide? Will we get support? Should we base it on a family of 5? Of course, it's understandable why that seems reasonable. I just talked this morning with the colleague here about an initiative in Germany recently for long-term unemployed to give them support for 5 years if they are hired by a company. The wage is basically, the salary is paid for years by the state, but it's very limited. It's only people who have been out of the job for years. This doesn't help anybody who is out of the job with not much support, just for a few months or a year. So I think an unconditional voluntary job guarantee would help. But we have to be careful. Currently, like in Germany, we have a system where people who have some savings, whether leave aside the question whether savings lead to investment, right? They won't get any support. At least in a job guarantee program, those people would have a choice. They could say, okay, beaten out 30,000 or just 15,000, I can at least voluntarily have a job, right? I'm not under this risk or under this angst, German angst maybe, that I have to basically pay and run down my assets until I can go into the welfare system. I think it would reach a high acceptance level than unconditional basic income, which is currently discussed. But maybe we should introduce it on a first limited level. And we have to deal with budgeting and so on. MMT, okay, one thing, but I see the point, but I'm not sure within a decade that will reach support, and MMT will be then universally accepted. We should do nevertheless something in the meantime. And also, I'm not sure whether we should wait for a change in government nevertheless. Just keep in mind, when it not just in Germany, but particularly in Germany, those who lowered the tax rates and those who introduced the major reform were the Red and the Greens, right? Of course, the Greens in particular don't want to know about it anymore. And therefore one has to be careful. In 1998, when they were elected, nothing like that was on the horizon. That's it, thank you.
I think we have 3 minutes for discussion.
Okay, 3 minutes. Any questions? Yes, sir.
The way I see the job guarantee is really in conjunction with the options fiscally on the moment. So what we're doing is we talk about.
Can you speak up a little bit?
Yeah, I'll stand up. It's better. The job guarantee is also fits in with a public purpose. When we talk about fiscal policy, we have to discuss what we're spending on. It's not a case of can we spend, it's what we're spending on all the time. So it will be whatever the people decide democratically. It could be anything. It could be for the UK, it could be the expansion of health services, for example. That's not within the NHS. So caring for the elderly, I think you said breathing to elderly people and so on. But it's also a necessary price anchor of labour, isn't it? So it's quite anti-inflationary at that point. So it's actually quite necessary given the fiscal dimensions of the government, if that makes sense.
So what would you suggest?
you're saying like
We vote for it, vote it in, vote it out.
yeah, but I'm saying that the JG, the job guarantee will be anything that the public defines it as. I mean, when you talk about the political dynamics, that will be as part of the voting system. So, you know, people should lay. We talk about. I mean, in the UK, this discussion just doesn't take place. It's all about can the government spend. It should be. It's always about balancing budgets and what have you. When we're talking about the job guarantee, we're talking about the fiscal options of the government as a currency issuer. And the jobs will be whatever people find is politically useful, whether that's administered centrally, which I think it should be locally administered, because if you look at dissemination of information locally, they'll decide what's better for the community and so on.
How it's funded, that's an issue possibly by the federal government, at least partly. Otherwise, no, you have, but administered probably on a local level. That's fine with me. I have just, my experience partly has in Germany shown me that once in a while, whenever a voluntary program was introduced, even the communities where I was born, for example, they replaced regular communal jobs with jobs that were then temporarily funded by kind of job guarantee programs until they were phased out. Janitors and so on were initially, or gardeners were initially hired and paid by the community, and these jobs were then outsourced and basically became temporary. So it's just the opposite of what we wish, but still it would not, it would not, or there should still be the discussion, do we need more community services, for example, in the first case?
Sure, but the offset to that is also with the way the job guarantee works as a price anchor, which is much more superior than what is generally used to supposedly control inflation now, which is obviously the natural rate of employment, the night rate. So politically that's feasible because the job guarantee is infinitely superior to that.
Okay, that would be a discussion itself, the inflationary aspect, but I didn't introduce that here. Right? Okay. Yes, but I see your point.
Yeah, I'm sorry, we have to.
Yes.
So we thought we were only 4, but actually we're 5. So we
yes,
have an
thank
hour
you very
left
much.
For 4 presenters. So it's 15 minutes per presenter now, including discussion. So my suggestion would be that we all present so that we get the presentations done, and then we have a common discussion on everything. If that's okay. Because so then I would say
Accepted.
10 minutes, or maximum if you have to go over time 12 minutes, but not more. So yeah.
Hello everyone, my name is Miguel Arjona. I'm from the south of Spain, from the University of Granada. I lecture in constitutional law. But basically, probably you asking yourself why a lawyer is interested in these kind of things. It's quite simple. When we speak about the job guarantee, we speak about a human right. So even when we speak about money created by the state, we are speaking about constitutional system. So that's my interest. I'm going to explain what is the discussion, the constitutional discussion about the job guarantee in the Eurozone. The right to work is quite different in different cultures. For example, it doesn't exist in the United States of America. President Roosevelt tried to introduce this kind of human rights, but never did. In Europe, we can understand that exists two kinds of right of work. One is in the area what we can denominate it the surpluses countries of Germany, usually with high rate of employment, that where basically the right to work is the right to work with some kind of conditions. But it doesn't exist the right to get a job. But in countries of the south of Europe, and my country, in Spain, Mediterranean countries, with high rate of unemployment, is considered differently. In my country, by a decision of the Constitutional Court, does exist a right to get a job. It's the same in Portugal, it's introduced, it's established by the Constitution, Or for example, you know that Italy is defined by the constitution as a republic of workers. But what happened when the money sovereignty was moved to the European institutions? That's changed everything, isn't it? The framework, the constitutional framework in Europe, especially in the Eurozone, is very complicated because we have different standards. For one side, we have the standard of the national constitutions. As you know, it's quite different the right to work in Germany than in Spain. Secondly, we have the human right fundamental chart in the European Union, where the definition of the right to work is quite similar to the surplus countries. It doesn't exist the right to get a job. How is the game? Very, 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 very complicated and very confused, because the European Court of Justice changed its jurisprudence very frequently. Basically, currently the decision is quite simple. When a state is implemented 100% the legislation of the Europe, the standards is the standard in Europe, usually less strong. But if the state is implementing just 1% of the national standard, the standard of the human right have to be the standard of the national constitution. This system, we call in law for constitutional lawyers, we call the multi-level protection of human rights. It wasn't very problematic when everything running quite well. But with the crisis, that's transformed everything. For first time, the Eurozone established and implemented some policies that destroyed employment, for example, in the denominated PIGS countries. So what was the game between the standards? The European Court of Justice changed in different decisions its opinion. Why? We need to understand something. The basis of the Treaty of the European Union is a conception, a particular conception of money. Growing is the same as stability. The idea of the lawyers, the idea of the politicians, the idea of the institutions, if we need great jobs, we need to have a perfect conception of what we can call some kind of definition of money, some kind of definition on inflation. You know, it's the Growing and Stability Pact. The idea is quite simple. The European countries made a euro, a currency, based in the idea of gold standard. If you study what was the Bretton Woods institution, and when Nixon finished with the Bretton Woods institution, Europe tried to rebuild a particular Bretton Woods institution for Europe. This concept is the concept that is in the euro, in the euro currency. So, what is the position of this framework, legal framework, in front of an idea of job guarantee? Quite difficult. Quite difficult because it's very important to define that, for example, the European Central Bank, the center of its policy is the control of inflation, nothing more. Nothing more. Because the European Central Bank is not a real central bank. It's not the bank of a treasury, because European treasury doesn't exist. That's quite different of the perception that Anglo-Saxon cultures defined a central bank. For example, Federal Reserve. In the Federal Reserve, by the Constitution of the United States and the Act of the Federal Reserve, the government has to control the quantity of money. I have to control too the value of money. But unemployment is something that it needs to be considered. And Congress, the USA Congress, is the guarantee. For the Bank of England, the question is more interesting again. Yeah. Exactly. Never England defined, or UK, sorry, defined what is the aim of the Bank of England. In 1945, some authorities, British authorities, trying to introduce the idea, to establish the idea that the principal aim of the Bank of England was the control of inflation, the control of prices, the control of the value of money, but never could establish this policy. So the Bank of England doesn't have any kind of aim. Do you understand me? What we need? We need something very simple. If we want to keep the euro currency as a real currency of Europe, we need a real central bank. We need a central bank with a European treasury. And we need, as a constitutional lecturer, that's my opinion, very clear, we need a standard, a very clear standard of what means human rights, especially that's very important human rights that represent, after the Second World War in Europe, the right to work. And that's it. I'm open to debate after with yours. And sorry for my not very good English, etc. Thank you very much. Sorry. Thank you.
Excellent in the time.
At least in the time.
So just to check, do we actually have Domenico Viola and Jan Jonas here? Both. Okay, good. Okay, so all right. So also in 10 Minuten musst du. Ist String F5 oder was? F5. Weißt du noch, wie das war? Wie das war? Okay. Something F5.
Ja, hast du einen Stick?
Nein, ich hab's auf dem, es ist schon da, ne?
Keine Ahnung.
Warum ist das jetzt weg? Kennst du dich da aus mit dem, wie ich das auf die... Ja? Nein, dass man das da wieder herkriegt, das hat sich jetzt von selber...
Der hat sich von selber verabschiedet, oder?
Ja, oder er hat sich... der Ticket vorher irgendwas mit F5 gemacht.
Du musst duplizieren.
Aha, okay.
Ungefähr so wie WLAN-Kabel nicht drin.
Ja. Aha, nein, ich kenne mich da.
Aber dafür bin ich ja hier.
Ja. Ohne dich, meine Frau. Danke. Okay, after technical problems, we're ready to go. So I'm going to talk about job guarantee proposal and taking into account also some criticism, or not criticisms, but reflections that Hubert made. I also think it's a good idea to start with a limited program, not a universal one, but a limited program in Austria, essentially to keep it to make it possible to finance it nationally, right? To not have to rely on the European Central Bank, but to start with a program that Austria can afford, even through taxes or going into debt. And therefore, like the strong restriction that I have is that the program should only be for the long-term unemployed. That's the basic essence. Yeah, I'll skip some of this. What is the situation in Austria? We've had a very strong increase of unemployment since 2008. So here are different unemployment rates. This one is the long-term unemployment rate that has basically since 2008 it was 1.5%. Now it stands at roughly 4%. So it's the long-term unemployment rate, so the people that are unemployed for more than a year. And we've seen a strong increase, especially also because Austria has been affected by a lot of migration from its neighboring countries. And as a result, we did not see the same reduction in long-term unemployment that Germany, for example, has seen. Although labor demand has grown similarly as in Germany, but labor supply has increased much more in Austria due to migration. And as a result, we have a lot of unemployment that remains and a lot of long-term unemployment that doesn't go down. And you can also see a strong segmentation in the labor market. Essentially, you can see that a large group is basically permanently shut out of the labor market. If you look at, for example, there was a study by the Austrian Institute of Economic Research, and they defined 7 types of unemployed people. The type 7 unemployed person was the one with the most unemployment. And during a period of 5 years, from 2009 to 2013, they were actually unemployed for 3/4 of the time. So all the days that could have been spent in work or in unemployment, 3/4 of those, 75% was spent in unemployment, right? So that's this particular group that is essentially shut out of the labor market. So you have a very unequal distribution of long-term unemployment in society. Here you can see that also the amount of, so the duration in unemployment has also increased. These lines are the lines, this is the line for people that have been unemployed for 5 years. This is the one that have been unemployed between 2 and 5 years. And this is the one that have been unemployed for more than 2 years. And you can see after 2011, 2012 especially, which is when the labor market restrictions that Austria had towards the new member states ran out, then you can see after that the duration in unemployment increased by a lot. It tripled, or in some cases, for some of these groups, it quadrupled. So what was there's a lot of a tradition of active labor market policy in Austria that is in principle very good, but it cannot solve the problem. So what the government in 2016 and 2017 did, they revived an old solution. They called it the Aktion 20.000, like the Action 20,000, where they identified the problem that a lot of the people that are long-term unemployed, right? A lot of them actually have an extremely low probability of finding a job again, and it's the worst for people that are over 50, right? So basically, when you're over 50, you lose your job, you have like a 5% chance of finding another job within 1.5 years, right? So it's extremely low. And so they did this program for the long-term unemployed that would create 20,000 jobs, which would then effectively halve the long-term unemployment rate for people over 50, right? So the goal was to get rid of half of this long-term unemployment for people over 50. And this was actually introduced. It went extremely well. The pilot phase went extremely well, but unfortunately the new government and the conservative and then right-wing nationalist government, they stopped it, right? We had an election and the Social Democrats lost, so the program was stopped. It did not create 20,000 jobs, but only 4,000. But however, still, if you only look at the pilot phase, which was only conducted in several pilot regions, you can see that the regions that had the Action 20,000 were actually a lot more successful in their long-term unemployment development for the people over 50 than those who didn't have it, right? So for example, in the most successful region, which was in Styria, which is the state of Austria, they could actually, within 6 months, they could reduce long-term unemployment for people over 50 by 57%, right? Which is quite, for a 6 months phase, quite impressive. I mean, it's a small region, of course, but the job creation scheme was very successful. Job creation happened only publicly, right? It was not private. It only happened either at public institutions like small towns, or it happened in NGOs, right? So it was. I mean, it's similar to what a job guarantee program would do, right? So the question then becomes, if we wanted to expand this, right, come up with a plan to expand this program as a policy prescription, then you would need around, the maximum that you would need is around 150,000 jobs, right? So you have roughly 150,000 long-term unemployed across all ages in Austria at any given day. And for those, you would need such a program. And you can finance around 50% in the developed welfare state, such as Austria, similar to Germany. You can finance 50% of the funds that you need through what some have called passive-active transfer, meaning instead of paying the long-term unemployed their unemployment benefits, you just use the money to finance a public job for them, right? And you double it up, and then you get the salary for the public job. And then I've done some cost calculations, what this would mean. The biggest decision that you have to make in that sense is the level of the gross wage. How much should it be? I mean, I've done different scenarios. Like, so one of them is the minimum. If we don't have a minimum wage in Austria, but through our collective bargaining agreements, we have somewhat of a minimum wage, which is essentially 1,500 euros that is paid 14 times a year. And the current proposal of the unions is that to raise this minimum wage to 1,700 euros, right? So I've done other possibilities is that it should be a collective bargaining contract wage, which would potentially be more than this. And these are then some of the results. I mean, I'll maybe just show you the cost in terms of GDP, because this might be the thing that is comparable to other countries. Essentially, the yearly cost for 150,000 jobs, if actually everybody were to take this job, is well, if you do the minimum, the wage at 1,500 euros, paid 14 times a year, because we have 2 extra salaries in Austria. No, I mean, don't get confused by this. Yeah, it's just 1,500 times 14 is your yearly wage, and that would cost 0.24% of GDP. Whereas if you were to have a job that is more in line with what you suggested as a yearly wage, right, like around 30,000. So this version here is it's this version here has a yearly salary of 27,000 euros, and that would then cost 0.36% of GDP. So it's how do these numbers compare? I mean, is that a lot? Is it not a lot? Here I've compared this to relevant quantities. So this is the most expensive program with the highest salary. In terms of government spending, this would be less than 1%. In terms of the central government budget, right, which would finance it, so it's not the state or the local government budget, but the central government budget, it would be less than 2%. And in terms of the social spending of the total government, it would be roughly 5%. And in percent of the government expenditure on active labor market policies, it would actually mean that you would have to increase the active labor market policies by around 50%, right? So this is 2 minutes, okay, thank you. So in terms of increasing the expenditure for active labor market policies or for employment policies, right, it would be a lot of money, but not necessarily for in terms of the total government budget. Okay, yeah, I mean, this is basically the gist of it. So maybe just in addition, the program that I have in mind is voluntary, right? So there's no compulsion It's not compulsory to take this job. You can choose to remain in the regular unemployment benefit system. But if you want to, right, you fulfill the criterion of being unemployed for more than 1 year, then you can request kind of the labor market public employment office to give you a job offer. So that's the system I would have in mind. Yeah, I mean, there's a lot of open questions. Obviously, you have to vastly expand the labor market authority and all the institutions that help it in creating those jobs, because creating at the moment it's probably we created 4,000 jobs in this Aktion 20,000, and we also create regular jobs around 10,000, I would say, for other long-term unemployed people. But bringing this up to 150,000 requires a lot of resources. It requires a lot of learning from the public authorities and how to create these jobs, where to create these jobs. So it's a lot of the questions that were brought up before, because it should be a job that makes some sense, right? It shouldn't be just any job, obviously. Okay, yeah, I mean, you can find the article. It's unfortunately it's only available in German, so if you have to read German to read the article. But the slides, I have German and the English slides I'll put on my website as well, and you can take it from there. And feel free to email me with comments, ideas, criticisms, and so on. Okay, thank you very much. So, who's Domenica? Okay. So, do you want to continue then, maybe? Yeah? Okay. Okay. Yeah. Or, do you want to go now? No? Doesn't matter? Okay. Yeah. Okay.
So, my name is Jan Jonáš, and I am from Brno, from Masaryk University, and I work with my co-author Ondřej Komínek on the topic of European Employer of Last Resort. I would like to say that it's like a proposal. I know that there are a lot of issues to be discussed. Probably we can think about these topics like room for opening discussion. But what is our proposal is that we propose a federalized employer of last resort program that would guarantee jobs to anyone willing and able to work for a local living wage in the euro area. So it's in some sense ambitious. What is interesting for us is this idea, as I told. It's not the program directed to Austria or to Italy or to any one particular country, but it's like complementing the missing fiscal union. Yeah, is think as minimalistic federal treasury, yeah, as you said. And for this purpose, we built a stock flow consistent model to estimate the effects of the proposals. Yeah. Where we start, or what is our motivation? So we consider the situation in euro area very difficult, very complicated, especially on the European periphery. And so we built a model that reflects the economic situation in the euro area. We try to stylize the important facts and to see whether this proposal can help to deal with the symptoms of the crisis. We started by the foundation of MMT that it is difficult to face the consequences of recessions, especially when you divorce monetary and fiscal policy. And we think that it is necessary either on the national level or on federalized level to have monetary and fiscal policy in tandem. Yeah. And our stock flow consistent model, as I told, it starts from some stylized facts that we consider what is important, that the crisis its origin are in private sectors. That there were huge current account as well as financial account imbalances among member states, especially from Germany, Netherlands, and from the so-called core countries into the periphery. I prepare one or two images just for showing the figures. It's a mirror image. It was already presented here today. And this shows the situation of Germany, of this net financial position of three institutional sectors as a percentage of GDP. And basically it argues that from 2000, Germany was able to make huge exports to other countries, and the domestic private sector was the net saver, net lender. And on the opposite direction, I think the most striking example is Spain, which is completely different picture. And here the foreigner sector is in positive numbers, which means that Spain face or challenge large imports of capital. Actually, it was, I think, in absolute amounts, Spain was the second largest importer in the world after the United States, which is very strange for countries with about 45 million of people. And on the opposite direction, there is the domestic private sector, which went into debt. It was not government sector, which actually was quite prudent before the 2008, before the financial crisis, but it was private sector and especially the housing market which was the main problem. So the private sector in debt, especially due to mortgage market, this is the factor we built into the model. And when the crisis hit the economies, there came the difficulties for governments, especially on the periphery, that the debt levels for saving the country became very large and from my point of view unsustainable without the assistance of ECB or other stabilization mechanisms. And the second point is that in the euro area with fixed regime, exchange rate regimes, it is impossible to devaluate the currency. Like in Czech Republic, we can devaluate the Czech crown and prop up the economy with export-led growth. And so the aggregate demand on the especially on the periphery is very constrained. Either private sector demand, this C+E, consumption and investment, but especially this government or public sector demand. Either G, government spending because of large deficits, and as well the export demand, although Professor Terzi showed that euro area was able to export a lot to third countries, to the rest of the world. And so the result are high levels of unemployment, especially of young people on the periphery. And the further result are growing target to imbalances by ECB, especially this is the figure. This is the target to balances. The blue one is for Germany. Actually, German Bundesbank is a huge creditor in this sense of ECB, and on the opposite direction there are Spain and Italy, where the main support from ECB is going. So what our proposal constitute is this missing fiscal union, and we believe in very minimalistic way, which would be effective and I hope politically acceptable. Because I see it's very difficult issue among different member states to deal about policy issues about common budget and so on. So we hope this proposal would take the stakeholders' interest into account, and from my point of view it will be much more meaningful to do programs like this than to finance the periphery state budgets by this ECB redistribution, by this target to balances. And while it is difficult to decide about parameters of this program, we just speculate that the financing of this program could be from taxation, the variant like some income tax redirecting from citizens of member countries to some common fiscal budget, and then redistribution to areas where needed. Yeah, and it would guarantee local jobs at a reasonable living wage, which is difficult to say whether it will be 15 euro or 12 euro. Difficult to say, but it should be differentiated, different in Germany, different in Greece. But as I told you, it's difficult. There are many parameters to be set up, and and what I see as the main benefits, thank you, are that this program would alleviate the constrained national budgets, especially in labor market and in social market policies. And it should work like automatic stabilizer on the income side, meaning taxation, higher taxation from countries with surpluses, and expenditure in states or regions with deficits. In this sense, it would mitigate the target 2 imbalances resulting from ECB assistance, as I told. And what I see very reasonable is that it is a program of direct job creation rather than spending, rather than supporting aggregate demand and to hope that this stimulation will somehow create jobs. Yeah, probably it will create, but from my point of view, not so much for long-term unemployed and so on. And since I see there is a lot of options, whether it should be from taxes, from income tax, sales tax, or from ECB, some kind of ECB assistance, whether it should be at what is the living wage and so on. So we try to estimate the stock flow consistent model just shortly. We continued or we inspired by the article by Goodley and Lavoie 2007 about 3 countries and 2 currencies. They built a nice model which actually predicted the situation in Eurozone that came after 2007. And we built it with 3 sectors: private, public, and rest of the world. The public sector is constrained by stability and growth pacts, so its net balance is 0 in our model. And on the north region, private sector is in surplus, and on the opposite side, on the periphery or south region, it is in deficit. We incorporate a housing market there because, from our point of view, housing market really generates bubbles in the areas in the countries of huge capital inflows. And then we try to simulate this model for 2 scenarios. One is without this European Fiscal Union, with the impact on target 2 balances, and the second is with the implementation of this target 2 with various parameters, and to see its effects on government debt, GDP, because we see some multiplying effects. If you send money to periphery to employ people, they will have money and can spend it again, and this is all. So these are the balance sheet, but I think it's not reasonable to explain it to you now. It will take a lot of time. So thank you for your attention, and thank you.
Hello everybody, my name is Domenico Viola. I'm from Italy and last May graduated from the Levi Economics Institute of Bard College. And today I would like to talk to you about something that recently happened in Italy. Something that concerns one of the five-star movements and current Italian government's main proposal, which is the reddito di cittadinanza. We may translate as a citizenship income, let's say. And just an introduction about the reddito di cittadinanza. Initially, it started as a basic income program proposal. You can still remember when Beppe Grillo echoed the theoretical view underlying the basic income scheme. Today, after the 2014 European elections, there were some, in the five-star movement, there were some ideas about changing the design of the proposal to transform it into a job guarantee program. Actually, this idea, the job guarantee proposal, never took off, and unfortunately, eventually, the reddito di cittadinanza became a workfare program, where compulsory 8 hours for free of compulsory work are in the program for the supplement to income or the poverty threshold incomes, and other like conditionality attached to the receipt of the receipt of the income, the subsidy. So in this, let's say, policy note, I'm going to I'm going to develop a comparative analysis of the 5 effects generated or not by these two policies, which is the reddito di cittadinanza and a universal job guarantee program. Okay, that we in Italy, and not only, as we saw, we have seen, we should like push for, advocate and push for. And so the 5 effects are the financial portfolio effects, the economic effects, the political institutional effects, psychological effects, and also the effects on the physical well-being point of view of individuals, and the social effects. Of course, these effects are are distinct but not separated from each other, but are very interrelated, like income statements and balance sheets in a capitalist economy, as Minsky said, for example. And now, importantly, the comparison of the 5 effects of 2 policies does not account for the effects of other components of the Italian government budget policy on the various aspects considered, but it simply isolates these effects from those produced by other policy measures, such as, for example, Quota 100, the fiscal peace, other policy measures. In addition to that, the effects will be considered both for the direct beneficiaries of the 2 alternative programs and for the domestic economy as a whole, considering also that the reddito di cittadinanza is incorporated in a relatively mildly expansionary, if not neutral, fiscal policy stance of the current Italian executive. So, to make the comparison, I used of the 5 effects of the two policies, I used Professor Tridico's job guarantee proposal for Italy, and while I'm calling for changing the design of the current workfare like reddito di cittadinanza to transform it in a universal job guarantee program for Italy, or at least a job guarantee program for Italy, Professor Tridico's proposal is not exactly a universal program. I chose his third highest level of job guarantee employed people scenario, where 4,110,000 people would be employed in the program. Professor Tridico chose to target this number as people employed the program, which accounts for underemployed people and the inactive workers, and also is equal would allow to reach the 2016 U.S. participation rate in the labor market, which is roughly 73%. And he assumed that the program would pay a basic salary of 1,000 euro a month, and he has, for simplicity, assumed that various kinds of unemployment benefits, which would no longer be paid to the participants of the job guarantee program, would be compensated with other administrative and material costs for the program. He he assumed a income multiplier of 1.8 and an employment elasticity of 0.43. And so in the blue table you can see, the blue table is Professor Tridico's scenarios, and I'm talking about using as benchmark for comparison the third one. And he calculated that the program the government would spend 49.3 billion of euros for the program, and the program would have also would contribute to GDP growth by generating 88.7 billions of GDP, and would have a first private sector net employment increase impact by 55,000 jobs around, and the government deficit spending would be equal to 22.7 billions of euro, assuming a mean marginal tax rate of 30%, which is even higher than the average marginal tax rate, but which accounts for the positive effects that GDP growth would have on tax revenues. So if we think of the Italian government total spending for, let's say, the reddito di cittadinanza proposal, we have like 6.1 billions of euro, which actually includes also the spending for the so-called pension, citizenship pension, which is part of the program, and the spending for the job centers for the structuring of the job centers, which is needed for successful, let's say, implementation of the program. So from the deficit spending that would be generated, assuming the same mean marginal tax rate of Tridico's proposal, deficit spending in the case of the reddito di cittadinanza would be around 4.3 billion of euro. And so from the financial portfolio effect point of view, the reddito di cittadinanza will thus necessarily generate a lower financial surplus for the direct beneficiaries of the program and for the private sector as a whole than what a universal job guarantee scheme might do. Not only the reddito di cittadinanza of 780 euros will be lower than the basic money wage paid through a job guarantee program, as said, but by design, the reddito di cittadinanza will consist in many cases of a mere supplement to households and or single individuals below currently poverty threshold incomes, as said. On the contrary, with a job guarantee program, any individual who is able and willing to work and decides to participate to the program would receive a basic money wage of 1,000 euro a month, plus a broad range of benefits such as the usual sick and maternal, paternal leave, social security taxes, contributions. That is plus a broad range of other benefits, which by definition, being related to socio-economic rights belonging to the sphere of working social relations, will be absent in the workfare program, in the workfare style reddito di cittadinanza program. Therefore, being the financial surplus generated by the reddito di cittadinanza on the income statements of, let's say, targeted households, individuals, and of the private sector as a whole, relatively lower, the subsequent effects in terms of accumulated financial assets or reduced liabilities will be also lesser than those of a job guarantee program. This means a job guarantee program would have a higher financial stabilization capacity for the private sector and than the current redditio di Nanza. And the same argument applies if an alternative job guarantee scheme paid a monthly wage of 780 euros, that is the same amount paid targeted by the redditio di Nanza programs, because in the case of a job guarantee program, targets not the household per se, but the unemployed or the underemployed individual worker. And the job guarantee is not designed to primarily provide for mere supplements to below current average absolute poverty threshold income, family incomes. And so if we look at the economic effects, and for the purposes of the comparison, I chose to take the same income multiplier of 1.8 for the job guarantee program, even though the income multiplier of the redditio di Nanza will be much lower than 1.8, but we can see that if the contribution to GDP growth, thus to aggregate demand increase, would be much higher. The job guarantee contribution would be much higher than the reddito di cittadinanza contribution, and also if we get the same employment elasticity as that Professor Tridico took, we also have, of course, like a different impact on the private sector, in the jobs created in the private sector as following the implementation of the program. So the main difference is that there is a lower a positive but lower effect of the redditio di Nanza on GDP growth, jobs created in the private sector, and also households' real disposable incomes would be increased by but lower than households' nominal disposable income would be increased, but lower than at the lower level than what a job guarantee would do, and as opposed to the job guarantee proposal, of course, a workfare scheme like a workfare program like redditio di Nanza does not imply any production of direct production of essential public goods and services, and also therefore there is no access for families to access these needed real resources. And this is the other one of the also main differences that I would like to quickly talk about quickly, is that the warfare scheme like reddito di cittadinanza have an underlying view of human beings, human society, and humans' well-being, which harks back to the Warisian-Paretian view of choice theory, as opposed to, for example, a Marshallian view of human being and societies and human wants and desires. And the Marshallian view says that, okay, we have other than only private commodities that can satisfy human beings' desires and wants, and that are part of GDP. And this Marshallian view of human beings and societies, where man is a social animal living in family unit, where society creates and defines new wants and desires, is in line with Five-Star Movement's original political philosophy, which GDP, for example, is not an appropriate measure of human well-being, for example. And if we just quickly, if we think of the political and institutional effects, we have that on also another elements that is against Five-Star Movement's original political philosophy, is that workfare scheme do not promote participatory democracy, as opposed to, for example, to what job guarantee programs can do, because and this is related to the concept of democrazia dal basso, democracy from the bottom, of the Five-Star Movement. And of course, the income distribution affects the contribution to increasing inequality by the generated by the job guarantee program would be positive, both in terms of within labor income distribution and, of course, labor capital income distribution. Whereas the reddito di cittadinanza is going to freeze the social power relations in favor of capital by adding a new blackmail for workers, because there are these conditionality which says if you you receive the income or the supplement to income, and you have to accept any of congruent job proposal from the private sector. The first one within 100 kilometers from your place. The second one, if you do not accept the first one, from 250 kilometers, and the third one, the third proposal, job proposal, will be around the peninsula, around Italy. And so, if you don't accept one of the three proposal, any proposal, okay, which is congruent to your training courses, you will lose your income supplement or your income. So,
I'm gonna have to cut you off.
Yeah, I've just finished, and yeah. So, the idea is to change the design of the scheme, of the proposal, of the reddito di cittadinanza, to change the kind of policy by transforming it into a job guarantee proposal. And it is possible because Five-Star Movement demonstrated us that they changed the design. And the job guarantee program is in line with Five-Star Movement's political philosophy, as opposed to reddito di cittadinanza. And the job guarantee program would give the current Italian government a higher political bargaining power with EU institutions and other countries because of the better and positive, higher and positive, better effects on in terms of economic, financial, and political institutional effects, and also psychological, social effects from the applied. Thank you.
Well, we have 9 minutes for a general discussion on all the papers. Who wants to make a comment?
My question is to you, actually. You have a job guarantee in one country with open borders, with free mobility of labor.
If you have it, so I didn't calculate it for a universal job guarantee in Austria.
Well, just for over a year, right?
Yeah. But I think the additional imports that would arise from the additional consumption of 150 additional employees in Austria would not be large enough to bring Austria into a deficit position with their current economy.
I mean, you don't think people would start moving into the long-term?
Well, okay, Austria. So,
is that inevitable?
Well, you would have to have restrictions on being able to get that job guarantee job, right? So, in my proposal, I would say, I didn't mention it, to have a certain time period worked, right? So to be basically part of the unemployment insurance system, because you're not immediately part of the unemployment insurance system in Austria in any case, right? You have to work.
So you'd have to pay in.
Yeah, have to pay in, and then after that you could have you're like, otherwise you don't get benefits anyways, right? So then since part of your benefits are used also to finance the job guarantee job, that's the restrictions you have to
And that would get around European rules.
I mean, that is legal that you have to have worked in the country to get a. I mean, if somebody moves to Austria, right, has a regular job, say somebody from Slovakia moves to Austria, works there for 3 years or 5 years, and then becomes long-term unemployed, then you have to give that person the job guarantee job as well. But they cannot just come in without a job and say I want the job guarantee job. No, that is legal.
Okay.
Other questions?
Yes. And would like to make a comment to your paper. I remember, for some reason, the date, because it was before the.
Please speak up.
Oh, speaker. Oh, I refer to his presentation. I remember a week before Lehman Brothers, at the 8th, I think, of September 2008, the European Commission again came out with a paper and with a discussion paper that basically argued Germany, please remember you have to follow Spain. The budget surplus of Spain, this is what is creating jobs and growth and all the benefits, and you see how it turned around. And the other paper from the gentleman, I forgot your paper. And what do you assume here as the salary? 1,000 euros?
What's that?
Are you referring to 1,000 euros a month in your calculation, or
No,
3,000?
Jerigo's proposal was 12,000 a year of basic money that would be paid in the firm.
But you would rather go for 30,000 a year?
No.
In a job guarantee program.
1,000 a year. A month, sorry, and 12 a year.
And you would, if you compared it to a job guarantee, universal job guarantee program for Italy, what would you attach? What kind of salary? Yourself, I mean. You think this is
like there are
reasonable?
different proposals for job guarantee proposals for Italy which have like different levels of wages. For example, there's Foggi's, Jacopo Foggi's proposal, which is 980 or something euro a month. Professor Tri's proposal 1,000 a month, and Mastro Matteo Esposito's proposal 1,300 a month. I would think that
per capita or per family?
No, per capita. It's individual, as I said. The target is individual, not household.
Okay.
As in, for example, the reddito di cittadinanza.
Yeah, I have a question or a comment perhaps. I think there's both. We have two sides here. No? The one is like it's kind of more like from the think it small, think it national, no? In this kind of Austrian part, or more like the German, to see okay, how can I merge this job guarantee with my local with my jobs, and how to implement this in the local realm. And on the other hand, I thought now from you and from the Spanish side, and so it's a bigger picture actually. It's hey man, we have Europe, and we have a certain we have a political job to do, and it's a story to tell. And the story is we live in Europe together, and how to build this social system that Europe provides, and the job guarantee is a perfect vehicle to merge this kind of idea of a social Europe, to have some kind of provided for everybody. The job is like provided on a kind of Warenkorb. What is this in English?
Basket.
The basket of prices, and perhaps there it's 2,500 with us in Germany, or it's 1,300 in Greece, perhaps it's 800. But to see this as a political concept, to draw Europe together in a certain sense of, hey, let's provide this for everyone because we're living in a common space, we profit from the euro, some countries more or less. And I think this kind of story that lies behind this is I think it was touched in these two proposals. And I'm a little bit more in favor of the big idea, I noticed that, than instead of thinking more like the SPD way, of like applying it to some kind of little calculation that then they will have their part. I think a little bit we have to look further, because we have a European election coming, and this kind of narrative, how we go into something like this, and the proposals that are on the plate are, I think, very important. So this was more like a comment than a question, but what do you think about this?
I would like to add what is very appealing to me is this estimates for United States, Austria, and so on. There are 1-2% of GDP, so very, very cheap program comparatively to monetary policy action. They're very cheap.
I was just going to say, with relation to that, I mean, the people of Europe have generally got to decide whether they want more integration, or whether they are going to go more like the British have gone and decide to separate, because, you know, the way you organise your job guarantee or anything else is going to depend very much on the attitude of the people, isn't it? So, I mean, first time I've been out of the country, out of Britain, since 2004, I'm not aware of the feeling amongst the people in various European countries, but that's going to be a major decider, I think, of whether you get local or...
And especially with this idea of, like you said, with the particle democracy, that you allocate the jobs on on the ground. That this is not something that comes from up, but there are different layers that you can. First, you have the right towards a job. You go to your local country, to the local community, and they ask perhaps your teacher, hey, what do you think I could do? And then you try to find a job to merge this with the market. And of course, we have this crowding out problem that we can discuss later. Then to see, okay, we have communities, and basically we have the right to stay where we are. You can to fight against involuntary migration, what is one of the biggest issue with this whole European migration stuff and everything to get this out. Okay, there's other issues, but then but to provide this on the ground and make this, and this is I think the most important point, to make this democratic in a certain sense that democracy not only works on the upper level in national and international realm, but to see, okay, we have to sit together here locally with our counselors, with our teachers, with the people that employ us, with the jobs agencies, and to see, okay, here we have a common, you say, democratic thing to see, okay, what do we need? And this is something that has to be allocated locally, and then can be got steps up to see, okay, there's perhaps jobs that can be better allocated on the regional level, on the state level, on the EU level. Perhaps other skills are needed, but this should be something like a layered thing to yeah. I think this is the idea behind it, that you can stay. You have also this culture preserving thing of not getting wrecked by deteriorating phases of globalism, to stay where you are, but also like preserve the community.
Okay, so then last comment, then we'll finish the session because time's up there. Please.
Yeah, and just a couple of comments that we should be careful what we wish for. I'm not personally a fan of changing the mandate of the ECB. Someone got to explain to me what would that achieve. One could, I don't see what else could the ECB do to create jobs. If we don't have a fiscal policy, if we don't have a treasury, that's the key. I mean, having a Euro treasury or another fiscal instrument, and the ECB will, of course, work with it. If there is a fiscal instrument, the ECB will support it. And one could even argue that if the ECB had an employment objective, they could have abandoned the QE earlier. Because the unemployment rate went down from 12 to 7 fairly quickly, and Draghi said, no, we don't care about employment, we look at inflation. And we need to raise inflation. And so he continued with QE, with low interest rates. And the other thing is, I'm also a bit skeptical about job guarantee programs at the national level, because an MMT job guarantee program is a deficit spending, entirely deficit spending, and implementing this in countries that need to run a surplus before interest payments may be pretty much complicated. And the other thing is, I don't think we should worry about Target 2 imbalances. Target 2 is a platform that makes the euro a single currency. This morning I was saying that 1 euro means 1 unit of liabilities of the central bank. But there are no bank balances at the ECB. The bank balances are the national central bank. So the Target 2 is a way to make sure that all the liabilities of the 19 national central banks are the same. And liability simply means, like in the balance sheet, that they issued money. And so it's a liability. And so we should stop worrying about Target 2 imbalances.
But didn't you see the Target 2 curve of Germany? The trade surplus is a big problem.
It's not a trade surplus.
Okay, we have to take a break now. Continue the discussion.
Thank you very much. You sent me last name? Yeah, H-I.
Yeah, yeah. So please.
Yes, okay. I think it's very interesting, your suggestion, but I want to have a closer look at it, okay? If you have also a paper, or
We
something.
are formulating.
Or some previous things or similar things, right? Just Yahoo. DE. Yeah, and I will be checking. Okay, Bert dot H-I-E-K-E. Is my name basically. It would be nice, maybe we can stay in touch. I think it makes sense, but I have to take more time, to look at it.
Because I have there, it's very small now.
Yes.
This balance sheets and flow metrics. We are now with my friend, with my colleague, we are now trying to put this into software and to estimate it.
But also your remarks, I have to take more time with a very fast presentation.
Okay, that will be
nice, okay. Thank you very much.
Excuse me, is your presentation available online or should it be published?
I would like to publish it in the future. We are still working on this assessment model. I think this is actually quite difficult for us to estimate the parameters to make the model workable. I don't have it online, but I can send it to you if you like. Yeah?
Only lawyers and people not law, right? The parliament or the population makes the law, right?
Exactly.
Like the local people makes proposals, what would they do, and the government gives them money to make some new parks, new gardens, and so on. It started to be quite popular in Czech Republic to make some proposals. But I would mention that this mechanism, it could be a mistake in the local levels. So the funding came from ECB, but I think it's too strange to finance it by ECB. I could imagine it.
Well, it is actually possible within the ECB mandate. And it was a proposal of your people, called the Institute, back in 2013-14, with some work in Paris. And the proposal was that the ECB fund the European investment bank, and the European investment bank was creating the jobs by public investing throughout Europe in public services, first and foremost. And this perfectly fits within the law exists, but the people are not willing to do it. And that's what talk we have right now. We'll say so delusional. They don't recognize the misery we are in. The leaders of the European Commission and of the Central Bank. What they talking about when the euro delivered is more
devaluate the crown in 2013. It devaluated the first. It stops this. We have a trade surplus. And we are cheaper. Our labor force is cheaper than.
Because of the devaluation, and that's why all the German companies, producing companies, moved to the Czech Republic.
You're surrounded by countries with Europe.
I see the explanation of this high employment level, just lower wages, and for example, Volkswagen and so on, making huge progress in Czech Republic. We are one of the utmost automotive manufacturers in the world. Poland also, but one in Czech Republic. Actually, we are inviting people from Ukraine and so on to work in Czech Republic. There is lack of employees. Comparatively to Portugal and Greece, but there is difficult to find a worker. There are advertisements. We are seeking shop assistants and craft work and so on. Very strange situation in Czech Republic in this respect. Employment, no.
They don't have the capacity to evaluate the currency.
I don't think
I think they did. I don't know exactly, but I think they didn't do it.
You need not only to evaluate your currency in the first place, you have to have a solid productive capacity. We don't have that.
at 89 or 99 because almost immediately somewhere else. So that you were lucky to be chosen.
It's that the major target industries to move
Connections, railway and highways with Germany. I would say English mentality is very similar to Finland. Very consistent labor time. For German firms to outsource some connections in Czech. Now, actually, the Czech government is able to reach surpluses. Taking budget deficits, fiscal surpluses. Now, because there is high taxation, a lot of taxpayers now, and so the government is looking up the debt to GDP. Not free, yeah, we have free education, so we don't pay. Universities are free. But we pay also Different issue. It was told in Czech Republic 25 years ago, so information of the Soviet Union It was progressive, since the Liberal Party is now 15% for everyone. But actually in terms of equality, we are like Scandinavian countries. Yeah, we are very similar. There are differences now, like that in the past, but we are quite similar in terms of I would say. So probably this progressive tax was not necessary. But now I would think, for example, the progressive tax of housing market, ownership of houses, something spoke about Austria, is very similar to Czech. Maybe 100% last 3 years up. Twice as expensive as before. Maybe this Airbnb accommodation, very, very expensive. Rundown rate, it was twice in Brno in 2014, 16, and I hope in April it will be in Brno again. He gave a lecture there, and what I'm interested are these structural models. I know he's so much in favor of safety. This is now my biggest obstacle to calibrate the model. This is very good for me, and I don't know if you know advice. I know that in England there are many in university like there are main figures of this structural modeling. Very, very similar. Actually, I see the structural consistent model that you see just in Austrian economic theory. But actually I got this idea of job guarantee from Randall. He spoke about it 4 years ago. I would say very few people understand
Mira, toma, mientras no me lo contamines.
Creo que no, pero que se sabe. Hoy en día que los virus son cada vez mejores, ¿no?
I'm trying to
not use the lines.
All is good.
Te lo pongo en el directorio de Rey directamente, ¿no? No vaya... ¿Eh? Bueno, no es paper todavía, eso, no es paper. Podría ser un paper. No hemos tenido que enviar nada. No sé, yo creo que para vosotros que sois académicos, a mí me da igual, porque no soy académico, ¿sabes? Sí. Sí, bueno, los he metido, los meto en el... ¿Cuál es el? Es que como tú tenías... No sé cuál era el tuyo. Espera, a ver. Sí, pero no sé cuál. Bueno, el mío es este, lo voy a pasar aquí al...
Y el mío,
aquí, ¿no?
el siguiente. El
Vale.
Presentation Mental.
Esto es, vas a hablar de chartalismo, ¿no?
Sí.
Vale, pues lo saco, ¿no? Esto... supongo que será este. Toma. Bueno, ahí tienes la nuestra.
cerca de Huelva, en un programa de universidad de verano con nivel Fresno y...
Okay, thank you.
Sí,
So, I'll not be using slides, but I'll write something just old school style. My name is Giacomo Bracci. I'm a PhD student at the University of Trento, and I'm also one of the founders of FEF Academy, which is an Italian think tank and consultancy firm that is promoting MMT in these years. This project I'm presenting today is about taxation and the non-neutrality of money. It was a project that came into my mind while discussing with Warren Mosler random ideas about the real contribution of MMT, and especially the question behind the project was, what is the real distinctive feature of MMT with respect to all existing theoretical strands, both orthodox and heterodox about money. So even if there is no definite answer about that, what I'm trying to do here is to recognize that the fundamental insight of MMT seems to me that the prime cause, the first order cause for the non-neutrality of money is the existence of taxation. The neutrality of money means, in the economic jargon, that monetary policies and fiscal policies will not have an impact on real variables, so they will not stimulate output and employment, in the sense that these policies are expected only to push up the general price level, because somehow people would not be affected by what Milton Friedman called the monetary illusion, in a sense that in a mainstream neoclassical framework, all resources are supposed to be fully and efficiently used by the private sector through market exchanges. But most importantly, when we come to money, things are not so easy even in the heterodox camp. Because, for instance, on the one hand, there are several orthodox theories of money, but the ancestors, if I may call them so, are fundamentally three. One is the Warragian general equilibrium theory, and this is essentially a theory without money, right? I mean, it doesn't have money. But actually what it has is inside money. So what does inside money mean? In the Warragian general equilibrium theory, which is the standard microeconomic theory that they teach in universities, all agents exchange real goods, or they exchange IOUs with themselves in terms of real goods. So what they do is they engage in private contracts between themselves that represent private market exchanges. But there is no state, no money, not anything that is related to actual institutions. And why do they think that this is money? Just because, as I said, it's not only a barter system, but it can be represented also by a system of private agents issuing their money, so each one issuing their IOUs, and then trading this into the market. And this is essentially the way that money is still treated in current mainstream models, so both in new classical model and new Keynesian model. So money is essentially a private IOU. The second strand is the so-called overlapping generation models, OLG, by Paul Samuelson in 1958, which means that for Samuelson, the reason why money exists, when I say money, I mean fiat money, okay? So not the private contracts related to Warragian general equilibrium, is because previous old generations want to leave something to the next younger generations, and so what they do is the young generations of workers that do not have anything besides their labor force, they sell the labor force for the old generations that have capital, and in order to do this exchange, money is created and makes sense. So if the first answer to why money exists in Warragian terms is because private agents exchange among themselves, the second answer of OLG is people save money and demand money because they want to rent their capital to the young generations. The third strand, which is the most recent one, is the so-called random matching. Random matching is exactly the same, the modern counterpart of metallism. Metallism is the theory of money according to which money is selected and chosen in a given territory because of its physical properties. For example, gold or silver or any other precious metal is as a value, as an intrinsic value because of physical properties. In random matching terms, this is achieved through bilateral exchanges among agents. So a large number of agents decide that they want to engage in private trades. And since they select the best money, then a general monetary instrument is created and is diffused through the general economy. So why is money important in these frameworks? Essentially because any market failure, so unemployment, inefficient use of resources, is due to frictions. Here. Frictions means all those factors that do not allow economies to function perfectly and hire all labor, buy and sell all goods, and so on and so forth. And the number one friction is monopoly. So monopoly and oligopoly, all those things that allow some people or some firms to have pricing power. When this happens, then money has a sense. If frictions do not occur, then there is no room for money. Okay, and this is for the orthodox framework. For the heterodox framework, there are lots of theories of money because money is an object of attention for heterodox authors, but we can isolate the contribution of Keynes, and the contribution of Keynes is based on aggregate demand, in the sense that if the level of effective demand expressed by entrepreneurs is not sufficient to hire all workers or to put in place all the necessary investments, then we will have what mainstream authors will call market failure. So we will have unemployment and so on and so forth. And why does this happen? Keynes uses the example of green cheese. In the general theory, he says, when a recession occurs, the only tool available to policymakers is to have people in the public believe that green cheese is wealth and provide them with green cheese. What he means by this is that in a recession, households and firms stop investing and demand money. But then the question remains, why do they demand money? Okay, it's not that Keynes does not provide an answer, but it's post-Keynesians that have tried to answer these questions. And I've isolated two contributions which are not, of course, everything that has been said on the subject, but that to me are important. One of these contributions is Paul Davidson and the concept of uncertainty. Because Davidson says the reason why this happens is because future is uncertain, people are not fully rational, and even if they were rational, they would still prefer to hoard a part of their wealth as money and a part of their wealth as goods and services to invest in. Still, to me, the question remains, why do they hold that kind of money, that fiat money specifically? Minsky is another significant contribution because in a 1993 article that we were speaking about before with some of you, he says that the number one reason why money is non-neutral, in the sense that people want to earn it and hoard it, is because all the economy can be understood as a system of interlocking balance sheets. So we can be, each household and each firm can be understood as a balance sheet with assets and liabilities, and so the conditions through which each firm and each household acquires this monetary instrument and liquidity has an influence on goods. So if liquidity is costly for some of these agents to purchase, then they will not invest, and this will generate a cascade of consequences as unemployment, as inefficient investment, and so on and so forth. But the question remains, I mean, why do they still prefer that kind of money? And another possible answer is circuit theory. Circuit theory, besides any idea of uncertainty, starts from this setting. We have a capitalist economy. There are workers that do not have anything besides the labor force on one hand, and we have capitalists. We need to think about an institution that is the bank, that on the one hand provides credit to the firm in order to purchase the labor force of the worker, and then the worker accepts this monetary instrument because he expects that this instrument will allow the worker to purchase some goods and services in the future. But then the only reason why the money becomes essential and non-neutral here not the only, it's not a minor reason, but the fundamental reason is because the worker expects this money to have some kind of purchasing power. He expects this money that he gets as a salary to allow him to purchase some goods and services in the future. Then what happens if the worker does not trust the monetary instrument? Okay, and 2 minutes for this, the final slide. What happens if the worker does not trust the monetary instrument? What happens if he refuses this money that comes out of a private institution? So to me, the hole and the gap that MMT fills in these two strands of literature is exactly taxation. And I think that taxation has, in a sense, draws the best aspects from both traditions. In what sense? In a sense that taxation is a non-market event, like a friction. Why is that? Because taxation is coercive. The state must impose with a punishment, which is a non-monetary punishment. It's an actual, real punishment if you don't deliver the monetary instrument, imposes the need for such a currency. And so, in the circuit example, the worker, as any other citizen, if he doesn't expect that somebody exacts his taxes, will be subject to a punishment. If the punishment is not strong enough, he will not trust the monetary instrument, and, for example, hyperinflation could arise. We have many examples in this respect. Otherwise, if he expects the punishment to happen, then he will actually use the money and believe that this is the money enforced by the state. But on the other hand, what MMT also draws from the heterodox tradition, which is, of course, not present in the orthodox tradition, is savings desires. Which actually connect to what Keynes defined as effective demand, in the sense that the level of taxation can be exogenously somehow defined by the government, but actually it's saving desires expressed by the private sector that actually determine the right, if we may say so, quote unquote, balance that the government will have to, budget balance that the government will have to run each year. So, back to the first question, if I would have to answer which is the most distinctive contribution of MMT, I would think it's taxation and savings desires that somehow fill a gap in monetary theory that is not only of the orthodox side, but somehow also helps the heterodox side explain why fiat money exists. Thank you.
Thank you.
This may be a simplistic question, but if you were to look at Marx and think about MCM prime, and the idea that that capitalists are present in the economy to make a profit, or capitalism in the economy for the accumulation of capital, and we can't speak about capital unless we think of money being as one of the key moments in terms of constituting the totality of accumulation capital. Is that a reason for money? I mean, can we find a reason for money in these sorts of formulations?
Sure. I think this is a reason for the existence of money. What MMT explains is...
But it's not in your list.
You're right, but it's here, because circuit theory is actually an academic definition of Marxian theory of money. Okay. In the sense that we have exactly the sequence of MCM prime, because we have on the one side labor force without capital, and on the other side capital without labor force. Capital has to acquire that labor force by, and what they add is the existence of a bank. Actually, Marx was a great endogenous money theorist, even if that is not the first thing that comes into one's mind when we think about Marx. So I think that defines the reason why a monetary economy exists, in the sense that why a capitalist economy using money exists, but we must make a step forward if we want to understand why the fiat government money exists. So the state money as the essential liability. Also because state money predates capitalism. In a sense, if we look at the evolution of money historically, it existed also 4,000 years ago when capitalism was not even invented, and it did not exist as a system. So I think these are two questions that are separate, but they are both important.
You're absolutely right when you start with the money story 4,000 years ago. I had a history background, and this is largely what we get taught. To my knowledge, Michael Hudson and David Graeber are heading in this direction with it, and that's definitely right. With your binding of taxation, I think that's also a very effective framing because it is taxation that is really central to the story. It's just that what MMT does, it gets the story the right way round. So the states will issue its unit of account, as we say. The taxation is the liability, so it forces the person who wants to use that to earn it, and that's the key thing.
Right, yeah, the tax liability, the expectation of tax liabilities is what comes first, we might say, and then expenditure happens, and then, of course, tax revenues can be collected, but yeah, I mean, you're absolutely right.
In terms of developing your argument, I would maybe wonder if taxation is the answer to your research question, why is money non-neutral? It explains the existence of money. But the non-neutrality of money, in that paper by Minsky, he actually says it's because the economy is a two-price system. It has capital goods and goods and services. Those are determined in different markets, and because their prices are developers are all the same. That's why money is not neutral. And maybe that's the explanation you're looking for, rather than taxation, which explains why there is money at all. And Minsky builds this on Schumpeter. He studied with Schumpeter, and Schumpeter says money is not neutral because credit is not neutral because it finances innovations which will change the course of the economy, and productivity and everything, and inflation. That's why money is not neutral. I think that's the simplest reason, the simplest argument to say why money is not neutral. Credit creation changes everything, and you don't know in advance what it will change. That's uncertainty, and so you can never say that money is neutral with respect to what.
Yeah,
so how is taxation necessary in that argument?
I get your point. I think there are two questions that are separate. One is why is money essential, which is what you were saying, and the other one is why is money non-neutral. In terms of credit or fiat money, actually the existence of taxation or of a positive interest rates do the same job, in the sense that they both make money scarce at T+1. So in a sense, the function of credit, of private credit and of government deficit, I think they do the same thing, in a sense that in terms of monetizing a transaction, the expectation for an agent that uses the bank account or the state's unit of account is both that without a scarcity function at the end, by the next period, that credit will be worthless, right? I mean, if default would not exist as a possibility, both in private credit and in the state's government, that money would not have any value, in the sense that it would be perceived to be worthless. So this idea of taxation as non-neutral comes into my mind because if we understand why any kind of government would monetize an economy, the answer is to mobilize real resources to its domain and then to use those resources for its functions in such a way that if this would not exist, the dynamics of the economy themselves would not exist as the government has planned them. If the activity of taxation would not drain this resource to the public domain, then all the rest of the economy would be barter exchanges without the beginning of new transactions. So this is the way I'm thinking about it, and this is why I think that this explanation is a little bit different from Minsky, in the sense that if we take Minsky, then the answer remains what makes credit do the job of monetizing the economy. I think these are two different arguments, because this is a macroeconomic argument saying that, of course, discretionary policies work, because if you have a monetary policies that pushes credit, that enhances credit, then this will have a real impact on the economy, and this is totally correct. My point is what makes also that kind of credit worthy of something, and the answer that cannot be that must be answered is that also that credit is perceived to be worthy because there's going to be there's a positive interest rate, so that you must repay that debt, and there is a punishment associated to non-repayment of that debt. In this sense, there is an argument by Goodhart and other authors in modern papers, Goodhart, Somokos, the authors that work in the general equilibrium with incomplete contracts tradition. I don't like the general equilibrium part, but their argument they made is something like that, in the sense that if you want to model any kind of monetary economy, private credit and fiat money and government money, they work the same way. And I find that quite convincing, even though I totally, this for me is totally correct.
Just one further point with the origin of the money story. It usually begins with the state. It's like kind of like what Warren Mosler tends to argue is the state provision itself, because it has a political mandate that it wants to fulfill. Money is the mechanism to transfer those resources to do that, which obviously then comes in with the taxation story. But I guess from I'm not an economist, I'm an historian, and when we're looking at money or credit, this is the mechanisms in which states or governments will use to provision itself in order to use the resources in terms of what it's politically trying to achieve or what's elected to do. That's the way that we would tend to look at it.
I think we should have one last question or move on to the next panel.
Okay, one last.
Maybe just challenge and a little bit in the future, because I understand the whole story of taxation basically accelerating the sort of, we're talking about money is about critical mass in the end, right? Everyone uses money because everyone uses money. And taxation was useful in creating this critical mass because it basically forced an entire population to do that. But now that the euro, for example, has been established as a critical mass monetary system in Europe, would you still need in the future, it's just a question for food for thought, would we still need taxation in the future anyway? Or would there be other means by which this sort of social contract, people would still use it?
This is interesting because it relates to crypto, right? Because
a little bit, yeah.
Because somehow the argument was crypto will be successful because there's an economy of scope.
But if I may, my question is, once you've established the critical mass, because obviously Bitcoin would need something like taxation to make it work. But once you have it already.
Mm-hmm. Well, I think that once you have it, it's always possible to lose it. Because if you think about all the examples of hyperinflation, that happened not always, but mostly in most of the times, because the tax system was not functioning anymore, because the government itself was not perceived to be existing anymore. Regime changes, wars, or very dangerous environments in which somehow the authority of the government itself was questioned. So I think it's possible that taxation must be maintained as a kind of existing condition, because otherwise there would not be the expectation that money can become scarce, in a sense. So, but on the other hand, I don't know, there is a nice paper by Ross Starr, I don't know if you know him, that makes exactly the same argument you are making, in a sense, and now I'm quitting, that it's, if the government imposes, let's say, a unit of account through taxation, then what makes money become general is the network effect. So I think that you're right in saying that you have to make the initial purchase of goods and services backed by taxation, and then of course it's the network effect that makes it general.
I guess we could agree that with its taxation or not, you need some kind of institution.
Yes.
So you need some kind of political process whereby you might not have taxation anymore, but people would agree to use other schemes to get people to still use something.
Exactly, and in fact in these papers they don't have taxation, but they have central banks and banks, but it's exactly the same thing. Yeah, thank you.
Sí, hay tiempo, ¿no? Bueno, no sé si controlarme yo el tiempo, me lo controlas tú. ¿Eh? Sí, cada 5 minutos me das un toque. ¿Te parece? Okay. So I had a much longer presentation, but I'm going to have to cut it a bit short. So I'll probably have to rush through some points, and I hope I make them clear enough. I'm not an academic, so I'm sort of honored to be here, preceded by a lot of brilliant people, and I certainly do not have their level of knowledge. I was very impressed by your explanation. I read Graziani's circuit theory, and I think there's a lot of Graziani in there, right? So I agree with a lot of your explanation and your interpretation. So I'm going to be talking about. I'm a member of the Spanish Association, Red MMT, and so I am an economist by training, but I'm not an academic economist. I actually work in the biotech industry. So I'm going to be talking about some aspects of inflation and interest rates. I think I'm going to try to provoke debate on the role of interest rates and the role of monetary policy, which I think is the main tool that is used by governments today. Is monetary policy. Fiscal policy has been basically relegated to a secondary role. And then I'm going to try to establish how the job guarantee, in a sense, can help to stabilize prices and also give currency its value. In a sense, tying labor theory of value with the currency. So I'm intrigued. Of course, I was introduced to MMT through Rani Ray and Warren Musler. For me, Warren Musler is a person who's always giving thought-provocative ideas, and this one was the one that intrigued me, especially some years ago when I first read it. And he basically has sustained that the role of that interest rates are actually inflationary. So raising interest rates is inflationary. Bringing interest rates down is deflationary. Contrary to what we have been taught in school and the university, what the people think, what politicians think, most economists think, the role of interest rates is actually the opposite of what most people think. And there's two potential explanations. One is the income effect. After all, if we look at the sectoral balances, the government is always in deficit. The private sector tends to be in surplus. Spain being an exception during the real estate bubble of the 2000s. But in general, the normal situation is that the private sector is in surplus, the government is in deficit. Hence, if you raise interest rates, there's a constant transfer of funds from the government to the private sector. So that would be an income effect in essence. The other one would be a cost transmission mechanism. Morris says, well, if we look at commodities, pricing of commodities, spot pricing, if you consider that you compare spot and forward prices or futures, the price today should be, if you ignore cost of warehousing, etc., should be equivalent to the price in a year from now, but also increased by the interest rate. So in essence, a forward price should be higher. If the inflation rate is 10%, forward prices next year should be 10% higher, and therefore you are building inflation into the system as well. So that was the first time I ever read anybody making this sort of statement. And to be honest, I hadn't found anybody else who talked about this, except I read in a book that is out of print by Abba Lerner called The Economics of Control, published in 1944, which is not available anymore. I had to buy it from Amazon, and it was the catalog from a German university. I was sent to Amazon to my house 3 years ago. And interesting enough, he came from a very different approach. He does a marginalist, has a marginalist approach, and he sees everything in terms of trade-off. If we give up a production of a unit today because we want to have more production next year, or if we give up using a factor of production today in exchange for using a factor of production next year, because we can probably increase our well-being, so hence we'll be producing more and living better next year or the year after, right? So in essence, there is a process of permanent deflation, and especially if we consider factor productivity. So factor productivity, if productivity is increasing over time, you should see deflation over time. And if you have perfect flexibility in a perfectly, how much time do you have left? 5 minutes? Wow, that was quick. So I think I'm not going to make it to the. Okay, so if you have perfect flexibility, prices will, incomes, rents, wages, prices will decline, and people will have an aspiration to hoard money. And that's not an inconvenience as long as the government is willing to print more money. But that's probably inconvenient. So he suggests a solution is to actually raise interest rates, and that will provoke a depreciation of the dollar, in other words, inflation, right? So this is another source, and this more recently, Warren Musler brought to our attention a paper by a Brazilian mainstream economist, Loyo, who, from a sort of classical perspective, looked at the hyperinflation episodes in Brazil in the 1980s. And he brings evidence that supports that from a fiscalist perspective, the high interest rates the government was using to contain inflation was in fact accelerating. So I was intrigued about all this, and I've been trying to say, well, can we somehow prove this? Is this true or not? Is this because from a logical perspective, it seems plausible, but is there real evidence in the world? And well, I'm glad that you talked about these circuits. So I'm going to skip this part of the circuit because I'm short for time. But I decided to look at extreme cases. So I decided to look at one Latin American country, Argentina, which is a country which is always struggling with very high inflation. And then I also looked at the Eurozone. And if we looked at the Argentinian case, Argentina is a country that systematically has been issuing government debt in a foreign currency, in the US dollar. So that is a recipe for disaster. They seem to never learn the lesson. Macri arrived to power about 3 years ago, and the first thing he did is to allow governments, even regional governments and local governments and municipalities, to issue debt in US dollars. And you can see an exponential growth there in foreign denominated debt. And of course, that is inevitably going to lead to depreciation of the currency. Here's a chart which I built a few weeks ago showing the evolution of the inflation, the monthly inflation rate in Argentina. And I also looked at one treasury issued by the Argentinian government, the LEBACs, looked at the 70 to 110 range. And as you can see, each time the government is struggling with a depreciation of the currency, what do? Well, they raise the interest rate. So they had, in Argentina, had fairly stable inflation throughout the early 2000s. Then, I guess, probably driven by balance of payments problems, they start experiencing depreciation. Response is hiking the interest rates. But you see, interest rates never come down. Inflation seems to come down a little bit until then you have another depreciation, another spike in the interest rate, and in the last episode in 2018, there was a major depreciation of the currency. The government responded by raising interest to almost over 50%, or yield. That's actually yields, but in the end, it sets interest rates. And what we see is a sudden acceleration of inflation. 6% a month is over 100% inflation a year. So in that sense, what we're seeing here, and of course, yes, inflation is driven by depreciation. Depreciation is obviously driving consumer prices up. But and then if we talk about inflation, really what we mean by inflation is that the currency is losing value vis-a-vis goods and services, but also vis-a-vis other currencies. In other words, people don't want pesos. They're just dumping the pesos. And it goes to your point about taxation. I think the real problem with Argentina is issuing debt in foreign currency and not having an efficient tax system, right? The other case is, of course, I'm going to skip all these. This is the case of the Eurozone. And of course, as we all know, the Eurozone has been struggling with deflation for several years. Inflation has suddenly picked up in the last couple of years. But for years and years, the central bank has had negative or zero interest rates, and yet we haven't seen any sign of inflation. How much time do I have? Because I was going to talk a little bit about job guarantee, and I don't know if I have any time left for that. So I have 10 minutes? Okay, good. I have more time than I thought. Because when I saw 5 minutes, I thought that was the time I have left. So sorry, you're going to have to listen to me for a while longer. Okay, so I was rushing to this. If we go back to a circuit, to a money circuit, I guess the conclusion from the previous section is monetary policy. If we take the null hypotheses that raising inflation rates is actually going to be, interest rates is going to be actually effective against inflation, or bringing down interest rates is going to create inflation, I think we can probably reject that null hypothesis. Or at least I don't know if we probably have to do a lot of econometric studies to support that, but at least there's evidence that raising interest rates actually might accelerate inflation, right? So the next part of my presentation, I want to talk about how a government can actually stabilize prices. And one of the tools we want to talk about is, of course, the job guarantee. And this is obviously, there's been a lot of work from Mosler, from Randy Ray, from John Kragler, et cetera. So a lot of these things I'm going to say are not a surprise. But Esteban Cruz has been working a lot on finding a connection or a compromise or a between Marxist theory of value and MMT. So if we start from a monetary circuit like this one, where you have capitalists investing in firms who hire labor in exchange for wages, and then distribute profits, and those are spent by households and consumption. We have obviously agents who are creating money, and those are obviously the banks. Those are kicking the production process. Those are the agents who have to decide what are the business wagers are they worth investing in. What they have to make some sort of guess in a world of uncertainty. So in a sense, if we use, in a sense, the capitalists are doing sort of a pre-validation of private work. So expenditure in labor acquired by capitalists is acquired because they want to make more money. They want to get more money than they initially borrowed from banks or from capitalists. And they have to make some guess of what is going to be sold and what is not going to be sold. So obviously, some commodities are going to be produced in the hopes that they will be purchased. And in Marxist theory, you could say that, or the classical Marxist theory, Marxist analysis assumes that all commodities are going to be cleared in the market. But this is not always the case, as we all know. We know that commodities are not always cleared. So we know that some firms will probably not make the sales revenue expected, and they won't be able to pay back the loans that they received initially. And this will result in business failures and a lack of validation of those bank loans, right? So we have then, in a sense, a pseudo-valuation of private work. And we can have a situation in which expectations of production are disappointed. The market is, the production is not socially useful. It is not sold. Losses are sustained by banks or firms. Or another possible situation is that banks decide to refund the losses of firms that have actually not made money. So this would be a logic of centralization. So in other words, we see it all the time. We want to build a new technological firm. Obviously, we think of Amazon, we could think of Google, we could think of Uber. The first few years, they're not making a profit. All these companies are sustaining huge losses. I work in biotech, and I see large companies who are raised hundreds of millions of US dollars in capital markets. They're making enormous losses, and they're undermining our competitiveness by selling below our prices. How much time do I have left? 15 seconds or 15 minutes?
15 minutes.
15 minutes again? Starting again? Oh, I'm finished. Oh, okay. I have to finish. Okay, sorry. So, 5 minutes. Okay, thanks. Okay, good. So this would lead to, in a sense, the creation of new money, of extra money, using De Vroij's term, and in a sense could result in inflation. Okay. So we have two situations. We have, using the terms of Ayeta and Orleans, which are a very interesting work, which I recommend reading. You have the logic of fragmentation, in which companies who lose money, who are not profitable, are liquidated. Firms sustain losses, capitalists sustain losses, banks sustain losses. And that would be the logic of fragmentation. And that could potentially lead to deflation. But we also have an alternative strategy in capitalism, which is the logic of centralization. So in the logic of centralization, losses are refinanced with new credit, with creation of extra money. And of course, since that leads to inflation, basically what we're doing is socializing losses. And this would be, in essence, another way of explaining financialization, a process in which centralization is really spreading the cost of business failures among the holders of the money. Okay? All right. So, in a sense, then, we can speak of social validation of labor that doesn't always rely on the market. So we have validation by the banks, anticipates the realization of production through the financing of the productive cycle. But we also have an alternative, which is validation by the state. So workers hired by an employment of last resort program can join the ranks of universal abstract labor, using Marxist terminology, together with those hired by the private sector. So here I want to start now another final section on the role of the job guarantee and managing not only the price levels and sustaining price stability, but also in managing the consequences of the logic of centralization and fragmentation. So I'm going to skip that one. But consistent with the integration of the work theory of value and the state theory of money, a policy of employment of last resource can be seen as a standard of value based on the management of universal abstract labor, thanks to the share of employment hired by the state. Right? And the volume of expenditure is not discretionary. It is determined by the demand for revenues coming from workers at the wage set by the state. So in essence, what we're doing is creating a mechanism that guarantees price stability. We're talking that the state, as a monopoly issuer of currency, is capable of setting the price of what it produces, which is the currency. In other words, the state is saying for each unit of labor, say 1 hour of labor, I'm willing to give you, say, 10 units of my currency. And that, by definition, is anchoring the price of the currency to labor. So in a sense, Mosler has defined this or made this analogous to a wage standard instead of a gold standard, right? Replacing the gold standard with a wage standard. So in essence, the job guarantee is inverting the causality of that mainstream trade-off between inflation and employment, the Phillips curve, and its modern interpretation, the Nairo, it creates a non-acceleration inflation buffer employment ratio, right? The NIBOR replacing the Nairo, okay? And so it flips around this trade-off between inflation and employment. So just to, I think it's useful. This is a graph I built a couple years ago, and it shows the evolution of the price of gold in euros. and the evolution of the wage rate in Spain over the last few 15 years. And as you can see, the wage is a lot more stable than the price of gold. So in essence, what we're saying is a job guarantee, by fixing the price of the currency in relation to labor, and labor being a prime cost for corporations, is basically stabilizing the currency a lot more effectively than a gold standard would. Okay. The other point, I think, and this is, I think, more interesting, because all this part about the role of the job guarantee in stabilizing the economy, is the role of the job guarantee in avoiding the socialization of losses. Because as logic of fragmentation leads to job losses, leads to deflation, leads to negative spirals in demand, what the job guarantee is doing is obviously avoiding those losses in jobs, those losses in demand, and it helps to stabilize the economy. But it can also be used as a very useful tool to counter the effects of centralization and financialization in the economy. Because obviously that can only be counted effectively through regulation, but it can also help and assist in the process of developing a strategy against financialization by avoiding the socialization of losses and avoiding the consequences of financial fragility. And I think this is a role that needs to be explored further and needs to be researched further. I think the job guarantee can be a very effective tool in the need to regulate the financial sector, avoid the creation of large monopolies, arrest the advance of the Uberization of the economy, and all this collaborative economy, models of modern exploitation, of modern capitalist exploitation. So in a sense, the state replaces a pseudo-validation with a direct social validation and mitigates the impact of the extra money creation by effectively increasing the socially abstract labor involved in the creation of goods and services that are enjoyed by the population. So I'm going to conclude, because I know I'm very short for time. But in conclusion, I think the null hypothesis that inflation can be contained by raising interest rates, or that deflation can be eliminated by lowering interest rates, doesn't seem to be supported by evidence. And we think that price stability is best secured through other policies. Definitely a job guarantee program. Other policies are useful, such as obviously having an effective tax system. But also the state can absorb job losses, mitigating damaging effect caused by business failures, and can sustain demand and avoid the consequences of logic of fragmentation. And also it mitigates the impact of socialization of losses brought about by the logic of centralization. Okay, thank you. I was a bit rushed, but yeah. Any questions? Yeah.
Just to clarify. So banks finance, issue loans to firms so that they could, start doing business, producing whatever they want to produce. The loans that do not get repaid, these credits that were created for these loans, they accumulate somewhere in the private sector, right? They stay in if the loans are not paid back, they accumulate with certain agents, like with big corporations who accumulate large amounts of cash, and that stock of money could then potentially also influence how the system.
Well, if a loan is not, let's see, there are two logics there. One is the logic of fragmentation. So, in other words, if a loan is not repaid, that means the bank is not getting repaid. It has to record a loss in its balance sheet, and obviously firms could eventually go broke. There's production that isn't being sold, on the other hand. So what you get is a system. Imagine you had a very simple economy and with a close a closed economy with no foreign sector and no government, all the money that you have in the system circulating is money created by the banks, right? There's no other source of funds, right? So if part of the production is not sold because it's not socially useful, that means there's more money in the system running around than there are goods and services, right? And then you can go to sort of a quantitative theory of money sort of situation in which you have inflation, right? That would be one potential situation, right? Another potential situation is, okay, these companies I invested in did not make any money, they lost money, but I'm going to continue funding their activities with new money and creating extra money to secure their success in the long term. So I'm hoping that eventually maybe I'll be able to create a monopoly or an oligopoly. This extra money is obviously injected in the economy, but there's obviously less goods and services for the same amount of money, and that could lead to inflation. Okay, so one situation could lead to deflation, and another one to inflation. If I explained that correctly.
But when banks
Yeah.
write off loans,
Yeah.
the credits that were created initially, they stay in the economy.
Well, if they're not repaid, yeah, they stay in the economy. Yeah, so, but the bank is obviously sustaining a loss. Yeah.
Yeah. And these credits could then
Yeah.
like be put into like private investment funds or whatever. Like these credits would then start financing new investments.
Well,
have to accumulate somewhere, so they have
yeah.
to.
Well, let's see.
To use, or they just stay as cash somewhere. I don't know.
Yeah.
Exactly, bonds, most probably, the savings of the corporations in the region.
I'm sorry?
They're like government bonds or.
Well, let's see. What happens is that banks do not recover loans.
Sorry, I have to interrupt because we have to finish at 7 o'clock and there's one more presentation.
Okay,
we
sorry.
can continue privately.
We could, yeah, okay. That's enough.
Okay. I'll try to be brief because we are all tired here. Okay. Lo pongo yo. Well, you can see the title here. Metalism and Cartalism, a proposal for reconciliation. Maybe it's a very provocative title for some people, but the idea here is I'm trying to present a proposal for making a link between two different approaches of understanding the nature and the origin of money. As everybody here knows, there are two kind of fundamental approaches. One is metalism, that present money as a commodity that, thanks its property, began to be used to overcome the operational difficulties present by barter. And the second one, the cartalism, consider that money is a type of debt issued by public authorities in order to distribute the resources in their communities. And these two approaches don't only draw account of the origin and nature of money very different from each other, but contain clearly some incompatible elements. This has led economists to choose one of the two visions and reject the other one when they analyze the economic reality. However, I propose here a coherent and solid, framework in which both approaches are perfectly compatible with each other. The result of the proposal don't only appease the analytical confrontation between metalists and cartalists, but it also throws a much more complete and credible explanation of the origin and nature of money, useful to analyze both history and economic reality, economic news. So that's an overview. I skip it. Here we have the main difference between metallists and cartalists. I think everybody knows, so I don't extend explaining that. And as for the nature of money, metallists considers it as commodity, while for cartalists money is a debt or a credit, depending of the view on the reference points. And regarding the origin, the metallists consider that the use of this commodity has been agreed by individuals who exchange products, while the cartalists maintain that money was a creation of public authorities. According the mechanism that explain that's origin, in the case of metalling, is an evolutionary process originated in a decentralized way in the market with the purpose of optimizing transaction. But in the case of cartelling, it's an imposition set by public authorities with the goal of redistributing resources within the communities. The main function of money for metallists is to be a main of exchange, while for cartelists is a unit of measure of credits and debts. And finally, according to the metallists, the value of money lies in the mercantile transaction that takes place, but according to the cartelists, that value is based on the taxes set by the public authorities. And as you can see, there are elements radically opposite each other, and that is what has led economists to choose one or another. But as I'm trying to explain, I think that's a kind of framework that permits find a link between the two approaches. What is this framework? I think that we can use the contribution of Mitchell Innes and also from other important economists that studied the origin and the nature of money. But I think that there is a example from NAP that is really useful for understanding what I'm saying. And that is the NAP. Maybe you know. I read textually. When we give up our coats in the cloakroom of a theater, we receive a tin disk of a given size bearing a sign, perhaps a number. There is nothing more in it, but this ticket or mark has legal significance. It's a proof that I'm entitled to demand the return of my coat. In that case, the theater manager are committed to satisfy a need, keep the code and return it when requested, and record that commitment on a disk. The key to this matter is understand that this debt doesn't work for any area, since it will only be accepted by the people who trust in the debtor. Only for the people who trust in the debtor. In next example, that this will only serve for people who were in the theater, knowing that its owners are interested, for the sake of their business, to keep their word. The discs are not useful outside the theater, of course. We are talking about a very small area marked by in the influence of the debtor, what could be called the control space. That is the name I put it. There are a lot of examples of this idea by using the train or disco tickets, etc. So let's apply these theories of credit and the control space to the cartelist perspective. The money created by the state are debts widely accepted by the public, and they are because the state imposed on the citizen the obligation to pay taxes nominate in their own of account, so that taxpayer have no other choice that accept and obtain that kind of money. In this case, the control space of the money issuer is much wider than the NAC example, of course, or in the train ticket example. The difference is that a person or a company cannot impose the use or the debt by force, so it can only convince people to accept them, which limits their control space. On the other hand, the state can force to use its debts, so it imposes its acceptance on everyone who resides under the territory its control. The tax capacity of the state has geographical limits. As money is a social relationship between the state and the taxpayer, its use is limited in principle to that particular society. The acceptance of money is fulfilled only in the territory over which the state that creates and exercises its power. There is no guarantee that it will be fulfilled beyond it. In this way, it can be deduced how this framework can be useful to find some kind of compatibility between metalists and cartelists. Cartelist postulate will only be fulfilled for the territory the user of the currency controls, being useless to analyze the monetary relations maintained with the rest of the region, an area that is much better explained by metalists. That is to say, money could have been created by a public authority with the goal of redistributing resources, but this would only have been useful within the social community that was subjected to the power of that authority. While in the spaces not controlled by any ruler, fundamentally those in which exchanges of products took place between different communities, money would have emerged as a commodity, chosen for its illiquidity properties throughout an evolutionary process. During an indeterminate period, both types of money would have existed practically on their backs with hardly any contact between them until the authorities link their money to the commodity that was used in relation between communities. In spite of this, money will continue to be cartelist in the sense in which government could continue to create and regulate it, but it will be metallist insofar as will have to keep some link with the characteristic of the money used internationally. So, there is evidence that barter took place in small areas, specifically in those in which two different people were found, and with hardly any relationship between them. This is what anthropologists as David Graeber and Humphrey explains, and these findings are consistent precisely with the idea of control space that I show you, because in any village or town of the time, social relations were articulated through institutions led by an authority, which made any use of barter necessary. On the other hand, since this social institution didn't operate outside the community in which they were originated, any activity carried out outside that control space had to be articulated through other type of social rules, in which barter stood out for being a rather impersonal operation that hardly needs any social convention. All this lead us to pose a question. Was there a relationship between the characteristic of cartelist money and those of the metallist? Or to put it another way, was there a link between the money that was issued by the authority and the money used internationally by traders? We know because the historical evidence that the authorities of the city-state of Mesopotamia initially referenced the money in a cereal, in a kind of cereal, but finally silver was imposed as the only mean of change. Archaeologists don't agree yet on the reason that led to choose silver as a mean of change, but evidence showed that silver developed as a unit of value and medium of exchange in Mesopotamia because the political structure up until the late second millennium was fragmented into a city-state that had to trade with one another and had to trade externally to obtain key goods. Silver was important because it was a broadly accepted currency beyond the limited borders of that city from Mesopotamia. For all this, it seems plausible to think that it was the external influence, progressively ascending, of course, which will explain why the authorities began to manufacture their means of payment of precious metal, such as gold and silver. In this way, they managed not only to be accepted in their control space, but beyond it. So, in any case, these facts wouldn't invalidate the cartelist perspective, but it would situate in a very specific field, the control space. The introduction of silver in the monetary system within the community doesn't mean that the cartelist money disappeared, since the authorities were still able to create their debts and without any financial limitation. The main difference is the value of cartelist money could no longer be established unilaterally by the authority, but it was heavily influenced by the value to which the relation maintained with other control space will lead. That influence is precisely studied through the exchange rate between two currencies nowadays. So, jumping to the conclusion, there is, I think, a coherent and solid way of making metalist and cartelist complementary, that is incorporating the concept of control space. This notion refers to the geographical area over which an authority is able to impose the use of this money through tax obligation. This space of monetary control is precisely what defines the areas in which the cartelist and metalist postulates are applicable. The former will adjust appropriately to those operations that take place within the corresponding control space, while the latter will serve to analyze the operations that take place between different control spaces. The available empirical evidence corroborates this idea. The first civilization used money that was created and regulated by the authorities, which is consistent with cartelism, but this only happened for those monetary operations that took place inside those communities, their control space. For all other monetary operations, the use of barter was chosen as a way of articulating commercial exchanges, what is consistent with metallism, and the passage of time meant that outside the control space, barter evolved towards the use of commodity money until the intensification of relation, commercial and military especially, between different people and civilization, and at pushing the authorities to create their money from the same material that was used as money commodity, and therefore intertwining the cartelist and the metallist perspective. The result of this process did imply the disappearance of the cartelist nature of money. As I said, since the authorities continue to create their debts without any financial limitation and in accordance with their norms. But rather, it's weakening and conditioning to the metallist nature of money. The value of cartelist money ceases to be established unilaterally by the authority resorting to certain taxes, but it was heavily influenced by the value to which the relations maintained with other control spaces will lead. That influences, is what I said, is studied through the exchange rate. And finally, this framework of the monetary control space is not only useful for the first stages of the existence of money, but also adapt to the reality of the current monetary system. The postulates of cartelists and metallists are not incompatible neither to explain economic history nor to explain economic news, but they coexist through the filter that suppose the delimitation of the space of monetary control. And that's all, and thank you for the attention.
I would like to ask you, how do you see the current role of US dollar as an international currency? Is this, from your point of view, metallistic perspective or cartelist perspective?
I think that's two kind of vision. One is inside of your community. So you, from the state, you can create your money, but you can set his value. For example, you can create a job guarantee model system, and you say 5 hours works is $10, for example. But it's only used for that community, because when you start to begin making transaction with another community that use another unity of money, it's another thing, because that is where I put the exchange rate, and the value change. You cannot control when you are trading with another community that put another use of the money, units of money. That is my view, of course.
I just think because of great US political influence over the world, so if the international role of dollar, probably from invoicing many commodities in dollar, but maybe also from this cartelist high power.
But I think that the power of United States is precisely that, because the dollar is used internationally, so the value is not changed according his political or economic structure. It's another thing when we are talking about another country, a small country, because they cannot control the exchange rate, and the dollar is used internationally. That's explain his force, his power.
But as I understood the metalist theory, it states that the value of the coin has something to do with the intrinsic value of the metal that is used. And I think this assumption has proved to be wrong by Randall Ray and also by Mitchell Innes. So therefore, the metalist theory is history, I would say.
I agree with Randall Ray in this view, that I think we have to explain with more time and widely. Why I'm saying that? Because you, as a king, you put the money in a kind of material and kind of metal, and you say that's it's worth whatever. But when you start, that is because it's not metallist. That is because it's not metallist, because you can set the unit of value, the value of that money. But when you, as a king, start a war with another community that use another type of money with another type of unit of account, there is a intertwining, a link that change the value of the money. For that, it's not correct the metallist, but if influence through the cartelist money, that is fundamental. I say, in cartelist, I consider that cartelist is more appropriate to understand the origin of money, but we cannot discard the other one, because affect through the exchange rate.
So very interestingly, the concept of the European Monetary Union is that all European nations could be competitive against the other currency, so we have to run. We all have to run a trade surplus, and that could only be against another currency, of course. And what they don't seemingly don't understand is that you can't control the exchange rate. You can't control these external factors. And I think that's how I understood what you're talking about.
Mm-hmm.
That's a practical outcome.
I agree.
I would like to say something that I think is interesting. Human beings are not usually so rational that we want. If we study, for example, what happened with the pound gold standard, I remember, I can't remember his name, but professor, Italian professor who was professor in Harvard, he passed away some years ago, he explained perfectly as the slogan of the pound, you know, as good as gold. It wasn't true. Why the British Empire produced surpluses, because the empire used this slogan? I think because human beings are not so rational, we believe, and sometimes these kind of things to could be confidence in our currency because we have gold or silver or whatever works.
Mm-hmm.
Do you know what I mean? So I think
psychological point.
Interesting. This approach between two schools, I think, is a very good idea, and we can think that metallings could be just have just an explanation in a point of view of psychology.
Maybe.
Why not?
Why not? So, thank you very much.